never done the show open before. This is exciting.
Amazing. We've got Issa with us this morning, and also tons of other guests. We've got Elliot joining us a bit later. We've got Chris Beecham as well. And look at the sunny view.
Oh, it's absolutely gorgeous.
Do you know what the weekend weather forecast is going to be?
Oh God, should I be nervous? It looks good at the moment, but wait, is it going to stay good or?
I think it's going to remain dry. Last time I checked, but we are an island.
That's true.
And so, you know, this could be an interesting weekend. I do know that farmers across the country are very happy that it has started raining. Good morning.
Finally, after months, right?
Yeah. If you guys haven't seen, just Google pictures of farms around the country when it was really hot, and you can. Some of them look like deserts.
They look like a savannah, right? Yeah, it's crazy.
It's insane. Right. Let's have a look. Issa's going to take us through the coming up. Right.
Yes. So we've got a busy day ahead. We've got some chat about overnight action. We're going to talk about the opening bell. Then Ronnie and Martin are going to take us through the week ahead. Normally that is us to do, but actually today we're handing over the baton to them. Number of the week is going to be you, Ange, and Chris. Let's see for the rest of the show. All sessions opening bell. Also Ange and Elliot. Expert Edge. We'll have Bill Blaine. That'll be exciting. And then Decoding Crypto with Ryan will be also super fun.
Yeah. And what is crazy fun as well is that thank you very much to those who have started putting questions.
Already in the chat. The chat is buzzing.
Great. It is buzzing. And also on Discord. Are you on the Discord?
I'm not yet. I actually need to get it set up. Yeah.
It's a great resource. All thanks to Maturin. Maturin, for those of you wanting to be on Discord, you have to get invited by Maturin, MATUO03. The question is whether there are two other Maturins already in the system. Can you imagine?
Yeah, I don't know, maybe. But like, thank you massively to the mods who help manage that kind of self-organizing channel. It's actually like...
Yeah, I think Friar Tuck is also one of the mods. And lots of people are already sending questions in to me because I'm getting in a special guest in September.
Oh, really? Cool. Like doing like an AMA.
Yeah. This is a personal AMA, for our community. Peter Hambro, you know Peter Hambro of Hambro?
Oh, yeah.
Yeah, he's going to come in.
Cool. That'd be super fun. Nice.
So pulling in those.
Should we have a look at some of their chats, because I think it covers at the start of some of the overnight action. We've definitely heard, I think, some people talking about the Powell discussion with Trump.
Absolutely. I'm going to show my screen in overnight action. So stay right there. We're going to go right to overnight action right now. Right, here we are. It is exactly as you said, really interesting, Powell and...
oh God, it's crazy.
I know.
They were both with the hard hats on the Federal Reserve building site. It was like absolutely wild. And then Trump was just grilling him.
Yeah. And the fact that, Powell's face just says everything.
Oh my God, it's awful, isn't it? I would, like, regardless of whether you think he's made the right decisions or not, that just felt like a miserable place to be, right? With basically your boss just shit-talking you in front of everyone.
Yeah. And also the thing is, this is reported on the BBC as well.
Yeah.
That, the kind of names that Trump's called him, this is according to the BBC, it's called Powell names like numbskull.
I mean,
Look at JP's,
This is when he hands him the letter. So there were two standout moments from this, and I think both of them contribute to some of the uncertainty that we're facing at the moment from a pure, like, macro monetary side. So the first moment is this moment you're just seeing here, where Trump hands him a letter. And it says, actually, the amount you spent on these building works is not $2.5 billion. It's like $3.1 billion. Yeah. And Powell looks really confused.
Yeah, he does.
He looks so confused. And he's like, do you have any evidence for that? And Trump produces this letter and hands him this letter. And you can see Powell in real time read the letter and work out what's happened. Yeah. And basically what Trump's done is include a building in this new building works that had already been built 5 years ago. So that they can kind of inflate the amount that the Fed seems to be spending on building works. And like the reason this is all the problem is because excess spending on building works is a plausible reason for Trump to get rid of Powell for cause. And that's the only way that Trump can get rid of him, because the Fed is independent, and so that he can't just end Powell's term or fire him.
Because he doesn't like his face or anything like that,
Or he wants them to lower rates.
But he made it pretty really clear. This is the thing that I found, like he made it blatantly clear too, because at the end of it, he said something like, let's just get it finished, as in the works. And even more importantly, lower interest rates.
So that was the second stand-up moment. Is they were wrapping up the interview, and one of the journalists asked him, like, do you have any final comments, especially in the context of like how difficult the relationship has been. He said, yeah, let's wrap it up, and then he like slapped Powell on the back quite hard.
Oh, I didn't see that.
Yeah, and then said, and of course lower interest rates.
It's
crazy, right?
It's crazy. It's crazy town, crazy town. Trader friends, all of you. So we've been talking about, lots of people asking about why is he paying so much attention to this cause, and calling him numbskull and the works as well. And there is a section of community out there. Say I'm not one of them. Just saying that there is a section of community out there. Saying that he also wants to keep the spotlight on the Fed, on JP, because...
So you can blame him, right, if something goes wrong?
He can blame him, but also it's kind of like a smokescreen to get everyone's attention away from the Epstein
stuff. Yeah.
And so pay attention to that space, because those who are close to the matter, who will not be named, unless they come here and talk to us about it.
Wait, do you have like some intel?
I'm just saying that look it up, because there are some people out there.
Like a genuine breaking news?
Well, it could be. It's not the first time that I've got things right here, and it is a real thing whereby he wants to bury it. Right? We've seen him saying to the populace, sorry, you've been misled, and all that kind of stuff. But if there was a black swan, many people think out there, for Trump anyway, it's this list, this file.
Yeah, and also he's trained all his fans to be conspiracy theorists.
Exactly.
And now there's an actual conspiracy.
See,
suddenly their muscle memory's kicking in, and everyone's like, oh wait, no, we didn't mean for us.
Yeah. Not for us, for the Democrats, not for us.
Yeah, it's funny. Yeah. I think the issue with the Trump Powell stuff is like, sure, I definitely think it's plausibly right that he's just doing it as a distraction. I think part of the other challenge is like the debt is so massive that they have to find a way to make the debt more affordable. And there's basically two ways you can do that. Well, three ways you can do that. You can just genuinely grow your GDP, and then your debt to GDP will come down.
Yeah.
Doesn't look like that's happening at a crazy fast rate. So that option is kind of off the table. Option number two is you inflate away the debt. Which
that's how governments usually
do it, but like we've just come out of a cost of living kind of crisis, and Trump basically campaigned on lowering the cost of living, so it doesn't really feel like he wants to do that. And then the third option is you just lower interest rates and like
hope that growth kicks in.
Exactly.
PDQ.
Yeah, or at least just take the interest burden down. So much of the government debt is still on the short end of the yield curve because they've just been kind of extending and pretending in the hope that rates would come down.
Let's show our viewers the where we are on the yields for the 10-year, the 30, and the 5-year.
I mean, look at that. That's crazy. So US 30-year yields are basically 5%.
Yeah.
That means if we are comfortable locking our money up for 30 years, we get 5% return. The equity index return is only averages like 7 to 9%. That's true. 30 years. 30 years is a long time, but still, it's kind of crazy, right?
It is kind of crazy. But also the fact that, despite this, we're seeing this almost like Groundhog Day for the markets. They just keep marching higher.
So that was the other thing I wanted to talk about. So like, despite all of this uncertainty, we're just basically having a massive meltup.
Yeah.
Where in the last week, we've had like meme stock mania from Open Door.
To be fair, that it did fizzle off quite quickly. Like Krispy Kreme.
Sure. But Open Door is still like, if you pull up the Open Door stock price, it's still frothy, right? Like, and implied volatility is still extremely high. And so I think we've got some of the kind of meme mania, some of the energy of that still existing. We have big cap tech names that are just melting upwards, like constantly just like kind of marching upwards, despite in some cases not super strong earnings. Like I think if you look at Tesla's down post earnings. I think it was down at its worst 8.5%, which is quite a big correction.
Yeah.
But it's not crazy given how bad the earnings were.
I know, it was so bad. But
so,
this really does move, did move the way I expected it. So I'm showing you the hourly chart here. Actually, 4 hours might be a better view. But you can see...
But yeah, look at that.
Yeah. You can see that it's just come back up, plateaued again. And this is the daily chart there. Right.
There's just an amazing amount of resilience in some of these big cap names.
Yeah. And so this is the daily chart, trader friends. And I did say on the show that we are going to see a big March lower for Tesla, because I just thought, you know, it's got so many headwinds, right, against it. Robotaxi, this is its big gamble, in my humble opinion. It wants the revenues from robotaxis and from, you know, the EVs and everything to then grab that revenue stream to build Optimus, and then that will be its next, you know, cult revenue generator.
It does feel though like every time you have bad news with Tesla, they like magic up some new business model.
Exactly.
That is going to be there in 10 years' time and is going to be incredible. But like, we still haven't seen the last one from 10 years ago, which is the robotaxis. They're not really generating any revenue.
No.
You're not seeing full self-driving. Like, autonomous isn't quite there yet.
Yeah.
And so it feels a bit early to then be declaring victory on the next revolution.
Yeah, but that's why this is like a cult.
So it's a tough time for them, right?
It is a tough time. Plus that magic thing that regulatory credits.
Yeah.
So for those of you that saw my short on this, I said, you know, regulatory credits also that magic sauce is coming away. And in the short term, I think it's, you know, still going to be trending sideways for Tesla. But as you can see, each and every time we get, you know, a bump lower, there are people who are buying it, right? And coming in on that stock. And I wouldn't be surprised if in this session we see it, you know, recover and move back up again.
Yeah. I mean, I wouldn't be surprised.
Yeah.
Can we pull up NatWest?
Yeah.
So someone in the chat was talking about NatWest. NatWest had their earnings. You can have a look. So NatWest has had like quite an interesting run over the last kind of couple of months. Like look at that march upwards. So I think a lot of the bank names are like quite interesting names in terms of like defensive assets. Like I think NatWest is obviously like a retail bank. It's quite a defensive holding. You can see that there's a slum sector rotation that's starting to happen. I mean, like, I'm not going to spoil too much of the week ahead, but next week you've got Barclays, you've got HSBC doing earnings. It will be interesting to see. We had JP Morgan also do their earnings, which were obviously very strong. So there's a question to me around how much some of these like banking names actually start to just outperform. Yeah. I think especially given a period of quite difficult earnings. Oh, cool.
I'm gonna whack this up, but I'm gonna just preview this because producer feels like we're gonna have to do a week ahead later, so don't bring this up just yet.
Yeah, but look how many earnings. Next week is crazy.
It's gonna be rammed with.
Oh my God, like Visa, SoFi, PayPal, UPS,
I can't close this eyes.
That's crazy.
Friends, we're going to have Martin come on later on and talk a bit more about this. Producers feels like you're ruining my segments.
Yeah.
But
well, it's a big macro week as well.
It is a huge macro week. And NatWest, one that I'll be watching because it did raise its full year income guidance. And then started its £750 million buyback as well. Yesterday I was talking
back a lot of shares.
We had a poll yesterday about people who thought buyback should be banned.
Oh, really? Why?
Yeah. And those that thought, yes, it should be part of your investment.
That's interesting. There's a really, really great book called The Outsiders, which is all about 8 different CEOs who all of them basically follow a largely similar playbook. One of them, in fact, is Warren Buffett. And all 8 of the CEOs really think about like their role as capital allocators. And like basically there's just a couple of buckets that they can kind of put money into. They can invest in their existing business, they can invest in M&A, or they can kind of return money to shareholders. And my view is buybacks when prices are high are a bit stupid. But especially when you've got a lot of like employees on equity-based comp schemes, they make sense. And when share prices are low and you have cash on hand, it feels eminently sensible to me to be buying back shares. And I think it's actually a really great way of returning like money back to shareholders in a way that's tax efficient. It just makes sense.
Yeah.
So I think I'm pro buybacks if done responsibly. It's just sometimes you see companies take out debt at the peak of their valuations to buy back a ton of shares, and I think that's less responsible.
Yeah, irresponsible. For those of you looking to invest according to buybacks, those of you that like buybacks, for example, Barclays obviously looking at ones. BAE Systems is still in the middle of its buybacks. I was asked.
It's funny. It's like the parallel to like dividend kings.
Yeah.
Like, who are the buyback kings?
Yeah.
Buyback queens.
Yeah. I mean, a lot of the usual suspects, right? So that you're legal in general.
Cash generating businesses.
Yeah. Other stock that I'm looking at before we kind of talk about the meltup, VW, the other one that. Yeah, because they've got.
They've come off a really difficult few years.
Yeah. But Volkswagen and many of the car makers in Germany had a bounce because of the outcome of the Japan-US.
The tariffs, right?
Yeah.
Wow.
And so, Volkswagen, Porsche, and all the others moved high.
Do you not think that Europe is going to get the equal car tariffs?
Well, at the moment, we're seeing this bounce up. But you know how everyone's been talking about this 15%.
Yeah.
I think we're in the world now, Issa, where, Trump. We talked about this quite often too. He comes up with a crazy number and then dials it back. Saying 15% seems okay.
It's so reasonable, even though it's 15% higher. It's like a lot of money.
Yeah, exactly. And so, but for today, Volkswagen coming out saying it sees its operating profit 4 to 5%, which is low end of 5.5 to 6.5%. So be watching that. Right, Phil, we got the chart. Are we up to the guess the chart yet, or have we still got time? Great. So let's just go through some of the. I did some digging and some crunching of numbers.
Okay.
So, Rich is obviously very bearish. He's taken positions whereby he's like, "Come on."
He's like very bearish.
Yeah, he's like, "We're gonna have." He thinks that we're going to have a 10 to 15% correction.
I won't lie, I was somewhat bullish until I saw the meme mania, and I was like, maybe this is a bit frothy for me.
So he's kind of thinking we'll have that correction. I kind of agree too, but not that large. I just think it's just then, buy the dip and it goes back up
just
again.
Just a bit of a V.
Yeah, a bit of a V. S&P still inching higher, even though indicators largely unchanged.
It's crazy. Just look at it.
Yeah.
It's just totally wild. Like, I think.
It comes at a time when not a huge amount has changed, right?
No, nothing has changed.
Yeah.
If anything, all that's happened is we've got closer to the August 1st tariff deadline.
Yeah.
And not really heard that many trade deals.
No, exactly. The market breadth, as far as I'm concerned, looking poor. Number of stocks hitting new highs, trader friends, still below July 3rd's levels. We've got the Philadelphia Semiconductor Index rising, but less than the NASDAQ. So its ratio as well is falling.
Well, I mean, pull up Nvidia. Like, Nvidia also just looks like a totally crazy chart. It's now more than $4 trillion.
And I love how it did that quietly as well.
I know, right? It was like no news story. It was like suddenly just it crept up above that threshold. And I think it is really worth thinking about if you were to think maybe 3 years ago, is there a world where you would imagine Nvidia would be a $4 trillion company? I think it's just mind-blowing. I think it was always quite a strong player in the space, but it was never this enormous a lead, right?
Yeah.
But look at that chart. That's a crazy chart.
I know.
Look how many green candles that is.
It's just so strong.
Yeah.
I mean, the momentum. We always say here,
it's almost like a safe haven asset, right?
Yeah.
It's just like I don't necessarily feel confident about the world, so instead of investing in gold, I'm going to invest in like silicon chips via Nvidia.
Yeah, and there are some data points out there that say that there's still a shortfall of chips in the next 7 to 10 years. So depending on which way you think this will go.
Yeah. I think one thing worth just keeping an eye out on is if you look at the bottom of that chart, you could see volumes, and like we are in the summer period, and so you can see how low some of those volumes are. And so whilst this is obviously an extraordinarily strong performance, it is a strong performance of quite a low base of volumes in terms of trading.
Yeah. Rich on the show said he didn't think that Nvidia would get to 4.5 trillion anytime soon. Not
Rich is really bearish.
Yeah, he is. In the next few years or next year or so. So I used AI.
Okay.
And I crunched numbers using.
Is this to predict when you think it'll get there?
Yeah. I love a chart. You know I love a chart.
Yeah.
And so I trained it to wrap together all of the analyst projections in the last, so year to date.
Yeah.
And also map out Nvidia's rise in terms of its market cap to give me a bit of projection. And I'm going to whack it up for you, trader friends. This is totally unique. This is an Ange chart that you only get here.
So you think they will get to 4.5 by next year?
Well, according to this chart, if all the analysts in the world from year to date, from beginning of January,
you should do a bet with Rich. You should get him to buy you like a.
Yeah, I'm about to lose money to you already.
Chip. Oh my God, we should check in. We should check in.
I lose money to you already, but it's okay because producer Phil has lost a bet to me, so then I will use that to
all
fund
the same.
your.
It's all the same money.
fund your Nike shoes, right? We have a poll. Let's have a look. Yeah. So, are you generally bearish or bullish on the market? Do put in your comments here. Have we got a duration?
As they say, only time will tell. Don't do it, cowards. Don't click the button.
Don't click that one. It's Phil's favorite line. Prior top, art of the deal. Absolutely. Go in with something that's so horrific and then come out with something you actually want. Boise, Friday sell-off at the moment. Profit taking, that's a question. Last 3 Fridays were red days. So that is a good observation as well.
Yeah, I think people sometimes feel a bit nervous going into the weekend because you don't know what news there's going to be and you can't really trade. So.
Yeah.
These are India, England, or neutral on the cricket. That is a tough question. For people who don't know, I was born in India and lived there for about a year. And then I lived in Turkey and then Switzerland. And I came to the UK when I was about 9 or 10. I am an England fan, controversially, for the cricket. But I know
controversial.
Well, but all my my direct family are all England fans. But if I was to talk to any of my family in India, they would treat me like I'm some sort of outcast.
Scum.
So I am. Yeah, exactly. I'm an England fan. It helps that IG, of course, sponsors the cricket. But yeah, no, England for me.
I was hoping to catch the women's India versus England on Saturday, but it was completely rained off. And
did you catch the women's Euros though?
No, unfortunately.
That was crazy. It was one of the craziest games I've seen. It was proper like a movie. It was the England team equalised in the 6th added minute of the final whistle. Basically, it was totally nuts. So they're going to the final, which would be nice.
Nice. Nikhil Shah, same Friday squeezes. Shorts don't want to hold short over the weekend. Yeah. And also, it's very tricky with if any tweets come out over the weekend and you can't move very quickly as this chart that you're going to guess right now, because it is guess the chart. Is it UK or EU? It's a European one this time, people. Right, let's do it. Hey, trader friends. And the winner is, let's have a look at the chart first. There we go. Let's put it up. It is Volkswagen.
Oh, it is Volkswagen. I'm so bad at this.
Boise and Jugger. The only thing is, Boise said maybe.
Oh, should we reward low conviction plays? But still, wow, I'm amazed they got that. Look at the highs of that in 2023.
I know.
Crazy.
I know, right? But also I kind of, it has slid because of the,
the tariffs.
And also what, 2023, is it at the end there? My eyesight's not great.
Yeah.
So, it's probably the tariffs. And
it's funny though, if you look at the, I'm not a chart reader at all, but if you look at the big bit, it looks exactly like a bigger version of the small bit recently.
It's like like one's under the microscope. And the other one's enlarged next to it. Really nice chart though, I have to say. Clearly a downward trend there as it tries to tick up at the very end there. Jugger saying David was right. I was going to think, oh my goodness, get you guys in a room and arm wrestle it out. 3 even. Neil! I didn't see Neil's answer. Amazing. So, Neil is away from the numbers. You were there at the event.
I met Neil. Yeah. Wait, oh my God, we should keep an eye on the clock.
We should keep an eye on the clock. How many seconds?
Like less than 20 seconds away.
Less than 20 seconds. So just a reminder, trader friends, of where we sit at the moment. Obviously, we had those big numbers out from Intel overnight, which mind-boggling.
Also cutting 15% of their headcount.
Yeah. 3, 2, 1, go! And we are off, trader friends. Let's have a look, zooming in so that Issa can drive us through the early picture there.
So we're seeing US Tech 100 broadly flat on the day, maybe after those Intel earnings. Germany also kind of a little bit down, but broadly flat. Where have we got big movers? You can see the Hong Kong stock exchange is down over 1%. That's quite a big move. Where else? We've got
Nikkei stabilizing. I mean, it's looking like a really quiet.
It's quite a stable day. It looks like.
Given a Friday, but also,
Although look at the EU volatility index. You've seen a bit of like the EU kind of VIX have a little bit of a spike. That kind of probably comes ahead of like next week has Euro GDP and some of the CPI data. That's kind of interesting.
Yeah, it's at the 18 handle right now as we
still very low.
Let's have a look at the individual movers then. Here we are, FTSE, and let's look at the gainers first. Here we are.
Wow, so there's NatWest. We had just spoken about NatWest at the start of the show. They had really solid earnings. Look, they're up over 1%. We've Intertech. Who else do we have? We have Lloyds. So we have quite a few of the banking names, actually. RELX is the exchange.
We've seen a real shift, movement of risk gone back into like banks.
Financial services in general, right? And you can see a couple of fintechs, actually.
Yeah, so just a quick reminder, we had NatWest raising its full year income guidance and starting its share buyback as well. Also crossing over to the losers list there, London Stock Exchange Group.
Wow.
Down 1.2%. Our CEO, Brion Kakoran, actually was at the LSE earlier this week recording.
Yes, because we had our earnings announcement this week.
Yeah. Also, we've got BT Group down almost 1% there.
Wow, look, WPP is down. Have you ever seen the WPP chart for like five years? I've never seen a chart that I find more long-term depressing. So you zoom out as far as you can, basically.
Is it more depressing than Aston Martin?
I mean, if you go, just look.
This is the monthly chart.
Yeah, if you go from like 2018.
Yeah, here we are.
Just look at that. Oof. This is during an era where advertising has basically just all shifted online, and the degree to which you're willing to pay for like proper high-end creative is just on the decline. But look at that, it's crazy.
Can I just say that I'm not sorry because my father's company, the company he worked for, was
acquired,
consumed.
Yeah,
by
WPP. They are famous for doing quite aggressive acquisitions.
And they didn't understand the model in Southeast Asia at all, and it was absolutely nightmare. Right, let's go over to Europe then. Let's have a look at Germany 41st. Jugger, this one's for you.
Yeah, let's see some of the DAX names.
Right,
they're mostly red on the day.
Rheinmetall up there, RSAX.
Total as well.
Yeah, and then let's have a look at the losers list. Volkswagen.
Oh yeah, that was the chart we just seen. Adidas.
Yeah. Yeah, also Volkswagen, don't forget we had Volkswagen earlier on, saying that its operating outlook, ROS, 4% to 5%, that was at the lower end, right?
Yeah,
so that's putting pressure.
So I imagine for a lot of these car names, this is just a softening after a bit of a spike yesterday.
Yeah.
But like SAP is on the down list. SAP is one of the biggest tech names we have in Europe. Definitely the biggest tech name that Germany has in their index.
Also, let's have a look over in France. Here we are. You were trying to guess some of the luxury names earlier.
There's Total as well on the French list. Carrefour is up 4.7%. I imagine they must have reported earnings or something to get a move that big.
Let's see. Carrefour. We are. Trying to get that. There we are. Adding that to the workspace. Yep, it had first half results. Let's have a look. And also, Carrefour is one of those that
One to watch.
Q2 sales growth of 4.4% like for like, and said it was in talks. That's right. That was what I was thinking of. It was
spinning off a business unit, right?
Yeah, and sell. So I think it wanted to sell its New Princess Group to try and use that cash to then fold into its smaller Carrefour, I guess like their metros.
Express, right?
Yes.
Yeah.
So many.
I can't remember what they call them, if they're like minis or like, like that. Yeah.
So that is the new model, which I find fascinating.
It's very similar to the model in the UK, I guess, right? Because you've got like Tesco and Sainsbury's all doing these tiny like Tesco Express.
Yeah.
Sainsbury's local.
We're surrounded by Sainsbury's Expresses, and you can't get away from it. Right, we got shares in Italy's New Princess also failing to start after deal to buy Carrefour Italia, seen 16.8 up 16.8%. So there you have it. Just letting you know, I've got someone in my ear. I think it's Martin, producer Phil. Martin is speaking quite loudly in my ear.
Oh, maybe he's coming on for the next segment.
Yes, he is, which is why I'm kind of like trying to not hear him. Okay, so we've got those up there. Dassault System also up more than 1%.
Oh yeah, wow.
And Eurofund is up 2/3%. Thales, interestingly, up 1/4%.
Look at some of the losers. Look at Airbus. Wow. Right at the bottom of that list.
Let's see if there are any other movies.
Michelin, the tire company, who I think missed on earnings, they're down over 3%. Wow.
Yeah. Another one that's moving that Andrew McKelvey made a killing on yesterday is Wizz Air.
Oh yeah.
Because it's now bouncing after yesterday's fall. So I hope
again had quite a difficult run prior to this.
Yeah. So that's the 5-minute chart there. Barclays upgrading the stock to overweight.
Yeah.
Another one that Richie Rich would like. Angie's algo is now waking up, which is fantastic. Puma is down more than 17%.
Wow.
Trader friends. So if you're trading the luxury space there, this is one.
That's also a crazy.
Seeing a lot of pain. Andrew McKelvey, morning to you. Wrong move, down 3.5%. Thank you for that. We started calling it wrong move because I had a position when I was thinking it was going to get bought, right?
Yeah.
And what he did as well is like, why is this not happening? Why?
I think the whole Rightmove saga feels like a classic example of just like they've just managed expectations so poorly as part of the potential acquisition.
Yeah.
But yeah, I mean, if you zoom further out, Rightmove is one of those companies that I think it's just, I don't really understand the business model particularly. I don't know how it's profitable. Well, I imagine it's not, but look at that. Wow.
Yeah. This is the monthly chart there.
And that's the moment it was announced that it was.
Yeah.
It's a clip edge if I've ever seen one.
Yeah. That was quite painful. I got stopped out, but it was still wrong move. Wrong move.
Wrong move.
Yeah.
Did you get stopped out?
I got stopped
in like near a level you wanted, or it was way below? It just went through blew past your stop.
No, I did a guaranteed.
Oh, nice.
Yeah,
nice.
which is good. But Wardy and I were commiserating.
Well, but imagine if you didn't do a guarantee. Yeah.
Yeah, so trader friends, for those where I say bring out your gloves, make sure you have a guaranteed stop. Right, we've got the poll results out now.
Yeah, let's see. Are people bullish or bearish? 18% say only time will tell. I blame producer Phil. This is this is a negative influence on our audience. But 47% bullish, more bullish than bearish.
Yeah. Which you know, that's what makes a market, right? So
yeah, I mean, like the market it does have positive drift. So
yeah.
I think if you don't know what the right answer is, it probably is right to just be bullish. Like, unfortunately, yeah.
There is a saying that you know, markets, and Bill, this is one of Bill Blaine's sayings, that you know, markets tend to be more optimistic than you think. Yeah. Most of the time.
Well, the other one that I really like is bears feel really smart and bulls make loads of money.
Yeah, I mean, if you were a bear before April until now, you'd be crying in your cave, right?
Yeah, I was a bear in Feb, which thankfully did pay off. But like, I think after that initial correction, I think it's just been just straight up, basically.
Yeah. Right, so we have been so busy going through all the movers that we didn't manage to go through some of the big change in broker ratings. So we mentioned the Wizz Air one already, Andrew McKilvey, but LVMH also
an upgrade.
Jefferies cutting its target price.
Yeah, I was going to say I'd be really surprised if it was an upgrade.
Yeah, to are you bearish LVMH?
Oof, I think the luxury sector is going through not a great time at the moment. I think. Yeah, I don't know. I feel like there's also within luxury, there's like luxury, and then there's not quite as luxury.
Yeah.
And LVMH obviously like has a kind of mid to lower like position in that relative to an Hermes or a name like that.
Yeah. Any dip on Hermes, I'm interested.
Oh really? Because you're just so confident the demand will be there.
It will come back. It will come back.
Yeah, LVMH is a tougher business though, and yeah, you can see that it was actually its peaks in Feb, and kind of has just been declining since then. They get hit quite badly by the tariffs.
They do.
Actually. Yeah.
They do, because the thing is, like, you know, LVMH, unless you're buying Vuitton. Yeah. Then it's pretty hard. L3 Harris Technologies, for those of you that cover the defense space here, TD Cowen raising its target price to $290 from 280. We also have SAP Barclays raising its target price. SAP, a really interesting one because it just had earnings in it. Didn't it?
It was slightly disappointing actually.
It was disappointing. Yeah. But you know, it is really struggling in the space of the trade uncertainty. And also, don't forget, it sells kick-ass business software, right? And when times are uncertain, the clients of this sort of software
don't want to
move, or they sit on a deal, or they put their hands in their pockets and say, let's wait till the clouds disappear.
I also think the reality is that it's just getting to be a more competitive space, especially because it's much easier to ship stuff with AI now, that like actually a lot of SAP's previous advantage is a bit harder for it to kind of work.
Yeah. Totally. Right, we have to go to break, but one more. Palantir, Piper Sandler initiating coverage with an overweight rating. A bit late to the game, but you know, hey, target price 170.
Well, the only final one I'd probably like to call out is, have you seen the American Eagle price?
Oh, yeah.
Since the Sydney Sweeney campaign.
I know, and then they all laughed at me because I didn't know who Sydney Sweeney was.
Really?
Another one.
That's crazy. Different generations, Ange.
I don't know who Sydney Sweeney is.
She's iconic it girl. It'd been in like all the big movies recently.
No idea.
No idea.
No idea.
You look blank.
I'm totally no idea. I think some people have sent me pictures and things.
Well, she moved their share price 10%. You should learn.
Tell me about jets, people. Since we don't know. All right. On that note, we're going to go to our next segment. I think Martin is waiting in the wings. Is that right? The week ahead. So stay with us.
Okay, guys. Before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed. It wasn't always about power. It was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat. Come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Bring me the next shiny new thing. Bring me the next shiny new thing.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging saving for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs. From scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
All right, hello, and welcome everyone to, I think this has got to be one of the first editions of the week ahead. My name is Ronnie. Sorry guys. My name is Ronnie and I work at the PCM desk, and I'm joined today by my brilliant colleague Martin Harris. Do you want to introduce yourself?
I'm the brilliant colleague Martin Harris. I work as a portfolio manager at IG, and we work alongside the PCM team, the likes of Ronnie and other superstars in that team. And we've been invited today to give you some news about the week ahead.
Exactly, and as you guys know, us on the PCM desk, we're very good at sort of talking and telling a story, but Martin actually knows what he's talking about. So that's why we've structured today's program where I will question Martin about what's coming up in the week ahead, and hopefully you'll get some insights to how to adapt your trading for that. So, Martin, do we want to get started with the equities? Producer Phil has been kind enough to get the chart up. Which sort of equities are you looking at, and which one of them are sort of popping out for you the most, and which one do you think will move the markets the most?
All right. So, I mean, we've had an action-packed week so far of earnings releases. It's not stopping. Next week, almost accelerating. We'll just go through line by line, taking a look at Tuesday. So big one starting off is going to be Boeing. It's really one that I want to watch. Boeing at the moment, I'm just going to pull up one or two notes I do have. Boeing at the moment, what we're tracking is the number of aircraft they're able to produce per month. So Boeing currently are producing in the low 30s each month. They've got a huge backlog of orders that they need to get through.
Low 30s?
Low 30s. They're producing low. So let's say they're producing 30 aircraft every month. They need to, they've indicated that they want to reach a production sort of capacity or a monthly run rate of 38 to 39 aircraft. So that's going to be the big thing that we're looking at, is how many aircraft have they managed to get to since they last reported. And they've got a huge backlog to get through. The market actually wants them to be at about 45 aircraft a month. There's also going to be news around, they've won the F-47 program, so they've secured contracts for creating the 6th generation fighter for the United States, and also need to see what's happening with regards to tariffs from China and other import destinations where they get certain parts from. So that's something that we're looking at for Boeing, but in general, it's really just about how they're doing with production. The other big companies for the day, I mean, we'll just go through that list. I've really just isolated the big ones. PayPal, Procter & Gamble, Spotify, which is going to be a great one for, in the tech space, trying to see how
the consumers are doing. As well.
Exactly. Well. I mean, that is probably the 10% of the GDP of Sweden at this point. United Health Group will be an interesting one because healthcare in general has been a laggard. If we look at like sort of the cyclicals that are, so I've mentioned this before, is that, typically the defensive stocks are not stocks that are in military defense, but defensive stocks, healthcare, consumer staples, and what used to be a defensive, which was property. Those have all been laggards in the last quarter, and we've seen all the cyclicals, the semiconductors, defense stocks, banks. They've all been really well supported. And that's really been about the changes that we're seeing with the current fiscal situation in the United States and how the administration support these stocks. So pharmaceuticals and healthcare have done poorly. We want to see what's happening in their last quarter because they're starting to enter almost a positive valuation space where you might see some value buyers coming through. Booking.com going to have a great sort of snapshot of like kind of the overall tourism market.
Yeah, it show a sort of greater overview of the industry in itself, right?
Exactly.
Looking at bookings, seeing number of bookings and across, because they're global players as well, so it'll give you total insight. What sort of data are you looking for when you look at a company like Booking reporting?
So we're looking at same month sales. So what we want to do is compare period on period because obviously you're going to depends on which part of the year people are traveling in, but you want to see capacity for hotels, and you want to see price that they the average sort of ticketing price that they're getting. Booking, fairly it's going to be a difficult market for them. So they were one of the big winners of like early adoption of Google as a search function. Now that search is moving towards AI, how are Booking handling that? So that's going to be a key component for them to challenge going forward, is actually instead of you using just Google searching holidays wherever, you're getting your AI agents to find bookings for you, and that's going to booking directly with the hotel rather than going through a third party like Booking.com. So that's going to that wouldn't have taken over too much yet, but we want to see what they've got to say about that. Marathon Digital, they've had a bit of a run because they're heavily involved in Bitcoin blockchain. They also supply cooling systems for Bitcoin farms, things like that.
Yeah, and they've had a Bitcoin and crypto market in general has been on a mega bull run lately. Exactly. So that's sort of one of those holdings that come in and sort of gets lifted by the positive crypto price. So that's a company like that is something you can look at our new crypto index. I'm not sure if you've seen it or anyone
I haven't
at
seen
home. We now have a crypto index on IG, which is not just an index of crypto, not just a basket of cryptos, but it's actually sort of adjacent companies such as Mara Holding that you'll be able to get exposure to through one investment. So,
and then
sorry, please continue.
Sorry, I just realized there's so many. I'll try to fly through these and not add too much. We don't have a lot of time. Last one I'll really comment on is Starbucks. So they obviously had the new CEO, Brian Nichols, starting, and they implemented a new sort of North Star program to try and emphasize more focus on drive in-store, drive-through, mobile and delivery. So instead of going through third parties like Uber, you're actually going to order directly from Starbucks. We need to see how those initiatives are doing. So he hasn't been there for long, but this was one of the very famous examples where he got the $60 million signing bonus to make him whole for when he left Chipotle and the stock options that he lost. But Starbucks, really big one is that what we saw last year is that comparable store sales, or in the last for FY24, comparable store sales declined 2%, and that was compared to an increase of 9% in 2023, really coming out of COVID. That's completely been
He's trying to make the stores enjoyable again. He wants to make the Starbucks experience.
The big thing is they said they wanted to be a warm coffee house feel in the stores, I think, rather than this kind of quick service atmosphere. But the whole thing there, the big one that I'm looking at is comparable store sales for China markets. That previously declined 8% last year, and that's due to an 8% decline in the average ticket price. So it's not that they're actually getting less people through, it's that the people that are coming through are buying cheaper goods. So the whole thing in Starbucks was to almost upsell into like these fancy cream-filled frappuccinos. They need to work out how they're going to get clients to actually pay for the really, it's almost becoming like a luxury good at this stage.
All right, Martin, we've got producer Phil in our ear saying we got 5 more minutes.
All right, 5 more minutes.
Do you want to pick out your favorites, the most important stocks that will move the market for the coming week?
Meta Platforms Wednesday, Microsoft also on Wednesday, Qualcomm Wednesday. Those are the big ones to watch. Ford is going to be fascinating because that is they've been the least affected out of the except for Tesla, out of the American manufacturers with regards to tariffs. So we want to see how they were. A lot of these producers also front-loaded inventory. Let's see how sales went for the last quarter. Cloudflare going to be massive. Amazon, Apple. MasterCard and Visa, the other two, Visa on Tuesday, MasterCard on Thursday. That's probably your best view of global consumer spending that you can get.
That's sort of the global macro view or equivalent that you get from Booking. But when you look at Booking, you get to see how tourism is shaping up.
Exactly.
With Visa and MasterCard, you get to see how consumerism is shaping up.
And MicroStrategy, I'm not going to pretend like I think that the fundamentals matter in this case, but that their earnings will still matter. Obviously a lot of our clients, and it's been, this kind of global success story about MicroStrategy trading above net asset value. So that's the earnings for the week. AMC Entertainment closing.
Should we take a quick dive into macros?
Let's do a quick dive into macro.
Yeah, so we got Tuesday, so we got the Fed decision. I think no one is really expecting a Fed rate cut. Stop me if you disagree with me. But at the end of the week, we get some bit more juicier figures. We got German, Eurozone, and US Q on Q, so quarterly on quarterly GDP development, which is going to be interesting to have a look at, especially the German ones for me, with their massive fiscal spending now of close to $500 billion. See if they can actually put that money to work and stimulate the economy. And then we got Bank of Canada rate decision, soon to be an American state, so we don't pay too much mind to that. However, on Thursday, we got the juicy stuff, Martin. Chinese PMIs, and we got Bank of Japan rate decision. Talk to me. What do you think is what's going on in your head there when you think of those two? Chinese PMI and Bank of Japan rate decision.
So I think, so the Chinese PMI, we want to see how the Chinese are sort of adapting to the rapid tariff changes. So that's going to be big attention on China's balance between US trade disruptions and the domestic stimulus. The domestic stimulus in China is fascinating. That's really where you get a lot of support. And this is, coming off of this kind of crashing real estate sector, which has now been stabilized in China through government intervention. And strong real estate sector in China is a strong Chinese consumer because, similar to the UK, lots of wealth tied up in property. So going to be really interesting to see what happens there. And then, of course, end of the week, we've got the non-farm payroll.
Oh, the big one. I saved the big one for the last. I'm quite curious to see what's going to happen. I don't think we're going to see much data that is. I'm struggling to see that we're going to see data that's going to sort of push the J-Powell onto the sort of cooling off period and cutting.
I think the only thing we saw was Trump actually harassing J-Powell with some fake news the other day with regards to how much they've.
Yeah, so Andrew McKelvey here, our good friend, is saying that Trump is expecting a rate cut. Well, just because he's expecting one doesn't mean he'll get one. Scott Bessent has come out and said he doesn't see any reason to get rid of Jerome Powell, and the data that we've seen consistently hasn't shown us a reason that the Americans need to cut the rates. ECB is a great example. Maybe you should get Christine Lagarde in after she's free because they've done a brilliant job in keeping inflation at 2% now and keeping rates down. Martin, we got a minute and 15 seconds
I think the last comment there, if Jerome Powell is able to give some dovish commentary, it's as good as a rate cut. And that might be enough for the market to accept potential future rate cuts, be buoyant for the tech space in particular, any of the just being able to discount at a lower rate. So that's what we're seeing. And obviously Trump wants lower rates. Trump wants a weak dollar. Trump wants low rates. He wants to grow his way out of the kind of fiscal hole that they're in, and that's going to be an uphill battle. But
yeah, well, he's got personal loans to pay off your way out.
Exactly. And I mean, low interest rates is what you need for property, and he's a property man. So I think that's ideal for Donald Trump.
Nowadays he's a crypto man.
Sorry, he's a crypto guy.
DJT, his social media platform, has come out now with crypto holdings north of $2 billion. Was it?
I didn't actually see that, but that's incredible.
Yeah, are you long in DJT, Martin?
I've just sold.
You just sold
all the DJT, so I don't have a horse in this race.
Okay, understood. Completely objective. Well, with that sad news, thank you very much for us, and thank you very much, Martin, for sharing your insights.
Whirlwind tour of the week.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs. From scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Hey, trader friends, welcome back to Number of the Week with Chris Beecham and myself. Hey, Chris, how are you?
Good morning. I'm okay, thank you. You?
I'm good. A bit cold without Rich and you here. I mean, Issa was here early on, but now the studio is freezing, hence my jacket.
Oh, that makes a change. Normally it's completely like an
like a
oven.
sauna.
Yeah.
Right, so you have a treat for us and our trader friends. Let's see Chris's number of the week. It is 3.1 billion. Oh my goodness, this is an easy one for you, trader friends. Issa mentioned this earlier on in the show.
I mean, in some cases, that's not actually a real number, is it?
No.
Some might dispute whether it's a number. So,
some might dispute there was anything on that paper at all that was handed to a certain person.
I think, I think if it had been empty, he might have waved it around because, we'll talk about it in a minute. Because I watched it 3 times. It was comedy. So.
It was pure comedy. It was pure, better than comedy, actually, because it's real life. Kirky coming up with Trump fantasy. Jugger saying Fed bill, well done. Jugger's on fire today. Good grief. So we let's just get our trader friends back on that video because we have some fun facts as well with regards to that. But why did you watch it 3 times?
Because it's just I couldn't. I saw the one clip and then I saw the clip from them cutting live from Intel's results to that on Bloomberg, and then I watched it again because part of me can't believe it exists. It happened, really.
Let's whack it up on the screen right now. Also, the picture on JP's face as well. I mean, who do you think?
Very descriptive.
Yeah, worse. It's his face and Trump, or Trump and Zelensky. Or there were comments on the Twitter sphere as well, whether it was Mark Carney, which was the most unbearable to watch. Trump and Mark Carney.
And then there was also Macron, wasn't there, when Trump said something in front of Macron and he said that's not true. So there's 4 of them so far that have been able to say, no, that's not true.
Exactly.
And so sadly, our Prime Minister is not among them, really, or at least not properly. So,
do you think, Chris, the ploy is to make it theatrical and to make the other person, just as uncomfortable as possible? Is that just the main point?
it's a power play. Because as well as having a deep desire to be liked, he has a deep desire to exert power over people. And he really thought he'd got him, I think. And as ever, the key component is you need to have a yes man standing in there as well. And the head of, I forget who the guy standing next to him is, who wasn't wearing a hard hat, which I thought was interesting. But yeah, he was obviously agreeing with the president. And so you need to have the sort of J.D. Vance type figure to agree. But it's brilliant, the fact that you can call him out on live TV by reading off his own piece of paper.
Yeah.
And then continue to do so. It's quite, just in that quiet tone of, oh, that's a building that's completed 5 years ago.
Yeah.
He did that. So that's why I watched it several times, because I'll probably watch it again today just for amusement. But I've never seen anything like it. I don't think you must have seen similar.
This is like a new standard altogether. It's in its own category on its own. I've seen many things, but this is something else. And the interesting thing, Chris, is that Trump appointed Powell, and then he's now the biggest critic of Powell.
Yes, and there are rumours going around as to why he really wants an interest rate cut. And put it this way, it's not to do with the US economy. The reports are that I've seen anyway, that we shouldn't always give credence to, but that Trump has a large amount of loans that are due to be refinanced next year. And he wants those loans obviously to cost less. That would probably be the uncharitable explanation, but it certainly has a ring of truth to it. So we'll see whether that's the case.
Yeah.
But even as we were talking about this with the BBC this morning, we were saying at the awful hour of 5:30 in the morning that essentially it's, even if he does fire Powell, you've got the Board of Governors standing behind him anyway. So there's unlikely to be a major change. And of course, he goes in Maine, as I think Trump's realised it. And I also think it serves his purpose not to fire him, because it gives you a whipping boy. So if you can't get your rate cuts, you probably might get a rate cut by the end of the year.
Yeah, I think around 90% chance in September.
Yeah, I'd look it up while I'm talking, but I think it's reasonable to assume it might happen, and if the tariff inflation does go away, and if we get this US-EU trade deal as well, then yeah, we could be in a place where he continues to cut rates, not as much as obviously the president wants, but I think it serves the president to have someone in there that he can bash.
Yeah.
Doesn't hurt, especially at the moment with other things going on.
Yeah, just looking at the chat, because Kirky, Ian, good morning to you. There's the argument for Canada as the 51st state as well. Canada joins the US, then they can have Mark Carney as US president. Very good. The whole thing about Canada too is not just a smokescreen, but there are many out there that think that, similar to the view that with climate change, many generations later, it'll be way too hot for places like Italy and Spain to grow produce. I mean, Ukraine is already one of the major breadbaskets, if not the breadbasket of Europe, and that's why Russia wants it. And lots, ECB certainly, many years before this, 15 even, they have already mapped out which areas will be let's put it this way, many areas that will be all right still to grow grain, and that would be Ukraine and Russia. So for the US, guess what Canada has? It has a lot of resources and also a lot of natural grain and soft commodities, if you like grain being one of them. So there is that as well. Interesting. Powell is also the first non-economist Fed chair in decades. I didn't know this. This was one fun fact that I didn't know about. First person in more than 40 years. I remember when he was appointed. Yeah, when he was appointed, there was he's a banker. He's not an economist by training. You might argue, given the mess the economists made, maybe that is probably a good thing. Yes, it's not. It's certainly a bit of a departure, and. But you can argue he's done, I think, very, very well. I think it's fair to say they should have moved earlier on hiking rates, certainly post-pandemic. The caution is understandable, and they should have come down perhaps a bit earlier. And I think, I wouldn't say the 50 basis point cut last year was a mistake, but it was a misstep, shall we say, in probably cutting at that point by that amount, maybe, because it sends the wrong image.
But if you do get employment weakening, if that starts to come off as well in the months to come, then I think prices don't go up too much more. You've got the rationale for Fed rate cuts into the end of the year.
Of course, JP is stuck between a rock and a hard place because if he moves too soon, then he risks the Fed looking like it has no authority over, what it does. Also, he wants to end with a good legacy, right? But let's have a look at the dollar basket. I'm going to wrap this up for you as well because, no matter which way you cut it, Chris, all that screams out to me is weaker dollar.
Well, exactly. And that sort of brings in rate cuts by another means, and it also makes imports more expensive. So the risk is that's not helping matters either for the US. Whether this has run its course for the time being, or the positioning data suggests that fund managers, institutional money is heavily short the dollar or even underweight the US dollar. Even Andrew Bailey this week was prepared to say that short dollar was a very crowded trade. So the risk is, at least in the short term, of some sort of spike to the upside. So we are watching that. It's not to say it can't go down any further, but I think it remains a sell on the rallies kind of moment. But with positioning this heavily pushed to one side, the risk is that you then get these sudden snapback rallies. I mean, it's certainly down on the week. It's recovered a bit the last couple of days. We'll see whether that continues, really.
Where's the big trade here as we count down to those US-EU trade negotiations? And also, we've got that August 1st deadline moving as well into view quite soon. One person I spoke to from an FX commodity desk said that, the euro, let's have a look at the dollar versus the euro now. It is at that 117 handle, near the 4-year high it touched earlier on in the month. The euro so far up around 13% this year because those tariff policies are taking the shine off the dollar. Do you see this continuing as we get to that August 1st and beyond level, Chris?
Well, certainly if you get a deal and it does look as if the clouds are aligning for a deal, then you would expect the euro to get a bit of a bounce on the back of that, really, even given the move we've had. And certainly I'll be looking at it's harder to imagine a scenario where both obviously stocks and the euro rally, but you'd expect the beneficiaries as well to be European stocks, really. And they've, again, had a great run. They rallied a couple of days ago on the basis of those headlines. They've come off. The DAX is off again this morning by 0.9%. So heading back towards 24,000. We'll see whether that can bounce. Because obviously this is the message from this week, is the surprise trade deal with Japan lifting the Nikkei close to its record highs once again. That's 3% move in the index in one day. That's the kind of, maybe not the exact model we're looking for, but that's the kind of playbook perhaps if you get the deal, because the rhetoric between Trump and the EU has been much harsher. The story of the EU planning a retaliation, whether this is just to sound tough ahead of the negotiations, because it certainly looks like, I mean, even the Japan deal it's not really a trade deal. A lot of the details are still to be ironed out. It's very light on detail, and indeed the views of either side seem to differ on it. And Trump saying that he will have oversight of where the 500 billion gets spent. That's not going to be the case. The Japanese government is not going to sort of sit on the whims of the US president. But it looks like, I think in many ways, the Japanese have caved to a bit of pressure because they're acutely aware of the pressure being put on them in terms of the Asia situation as well. And so I think there's a bit of bowing to the inevitable here with the US. We'll see whether that plays out with Europe, though.
Yeah, like anything, the devil's in the detail. One that's been doing really well, let's have a look at the Aussie dollar versus the US dollar. But, this is one I would say put your gloves on, because it is already hovering near at 8 months highs. The question now is, because there's so much risk on appetite baked in to not just markets, Chris, but also, we've seen the action in the meme stock space. We've seen even all the cyclicals, even the smaller caps, being bid higher. Do you expect perhaps some froth to come off with regards to the Aussie dollar?
It does feel that way, doesn't it? That everything's just getting a bit frothy. It's been an uptrend for the Aussie, but you look at it and it's been very, very choppy. It's not a smooth, elegant one. It's been quite a grueling move to the upside here. So the returns have probably not been fantastically great, even if you have been long, because it's 150 points or so. Certainly since the late June sort of slump, it is still moving higher, but there's just not much to talk about really in terms of where the catalyst is going to come from for FX. So this doesn't feel like one where they're particularly frothy. Obviously, it's the small caps, it's the meme stocks, where it is beginning to feel a little bit like 2021, although I think in terms of actual size, it's quite limited, really.
Yeah.
The main focus, the main story still has to be how retail investors bought the dip in April and institutions still remain cautious. And even now as US stocks go higher and higher, they will just drag institutional money back in. It'll be people looking at that performance and thinking, I'm not in that, I need to be in that to burnish my performance. So there will be that case. It's quite interesting to see, of course, the FTSE doing so well this week as well. Actually, after the Nikkei, it's the best performer this week. Again, it's not a great index in terms of returns, but it has got a combination of valuation and dividends. So if you're a fund manager, it's probably easy to make the argument rather than it is to chase the US, which is back at 23 times earnings. But then again, you've got the quality argument coming into the US that on so many metrics, US stocks just beat everybody else in terms of profitability, in terms of earnings, in terms of margins. And that's the reason why they trade at these high valuations. And it could be that you get a bit of weakness in the August-September period, as often is the case, but it doesn't seem as if it's going to disrupt the overall trend, unless, of course, Donald does something crazy between now and then. And, of course, there's another upset. But, yeah, down 45,000. We could see it beyond that. 46,000 by year end wouldn't be too aggressive, I think, at this point. Probably not aggressive enough, really.
Yeah, totally. And with Trump involved, there's everything to play for. We got to go soon, but ANZ strategists still expecting Fed to cut rates by 25 basis points in September and again in December. Chris, always a pleasure to speak to you. What is your weekend looking like?
I think I've got... it's my wife's birthday.
Happy birthday. I hear you've got guests as well. Is that why you've been moving? Is that why there are no books behind you?
No, it's because everybody's off school. That's what it is.
I see. We have a question from Monkey Man. Quickly check your teams, my teams, or Chris's teams.
Yes. Is it money supply question? Let me pick it up on Monday. I promise I'll pick it up on Monday.
Monkey Man, he will pick it up on Monday. Right, thank you so much. Do stay with us because we are going to be back with Bill Blaine. So all your questions for Bill Blaine, please slam the like and subscribe button. We'll have all sessions first, of course, with Elliot. But please slam the like and subscribe button and put your questions here for Chris and Bill Blaine as well, and we'll get them asked for you. Thanks so much, Chris. See you at a later time.
Okay, guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Bring me the next shiny new thing. Bring me the next shiny new thing.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, trader friends, welcome to all sessions. This is the best bit of Trade Live with IG, in my humble opinion, and we are joined by an even better bit, my better half, who is here. You're with me because I am cold today. Can you see my coat?
You do have your coat on.
We have 2 fans here that are blowing because normally it's like a sauna. Of course,
She's nice.
Rich is gone. Nice. We've gone off to Ibiza.
She's on the beach, yeah.
On the beach, where it's super hot. Chris is at home. And also, because school's out, I suppose. And we've got 2 people in the gallery instead of 3, normally.
It's a quiet office today.
So thank you for coming in.
No worries.
Thank you very much.
Always a pleasure.
What is hot, though, as well, are the markets continuing.
They are, yeah.
Despite vol being low still.
Yeah, so what, fresh highs again, S&P and NASDAQ. VIX is relatively stable there. You might have expected the VIX to come off maybe 0.5%, but that's kind of stabilised. So are we sort of in no man's land? Possibly. Is it going to continue? I think it will for the next couple of weeks.
Let's take a look at the VIX as well whilst we are on this, because have a look at that, trader friends, that climb coming when the VIX is still at that 18 handle.
Yeah, it's been persistent. It's not willing to go much lower than this. You would have expected VIX to be softer given what S&P's done over the last month or so.
I mean, so oil and gold as well, we're talking about this, continuing to come under pressure. However, the grind up on the markets, coming amid what looks like a lot of froth, even though market breadth seems to be weakening, but we're still seeing this grind up. So is it mainly because, retail investors remain invested, or is it because no one dares to come away? No one dares to become a bear after what happened in April. What is it?
There's a good article in the FT today, actually. Headline, it's not, it's fear, not greed, that drives the stock market. Anyone that's got access to FT, it is behind a paywall, but anyone that's got access to that, that's a real good read. And that's definitely the theme that we've seen in the last probably 6 months, I suppose. This real sense of FOMO. There's been so much investment into AI, into the crypto space. That FOMO is definitely the dominant trend at the moment. However, there is this other side of the coin, FOL, fear of loss, which will come around at some point. So
fear of loss. I like that.
Absolutely. So you cannot be complacent.
It's like dating. fear of loss. Do you think fear of loss is greater right now than the fear of it completely going against you? Because Rich is bearish short term.
Yep.
So in the next few weeks, he's looking, or his theory is that there's going to be a 5 to 15% drop.
Okay.
Right? Somewhere in the
Yep.
summer months. Same thing as Joachim Clement from Panmure Liberum as well.
Yep.
And Joachim says what happened then is people come back in, buy the dip, and off you go.
Can we start again?
Yeah.
Yep.
Is that kind of, mirroring your view? 30 seconds to the bell.
Let me see if you can get up in fact, we can do the chart after, but very quickly, because I don't have time to go into this in the depth I want. We'll come back to it. We can touch on the skew of S&P. Out of the money puts are still very well bid. So there's nothing that looks overly cheap out there at the moment. But let's come back onto that after the bell. Ding, ding.
Bring it up. 6, 5, 4. Pick it up. 3, 2, 1. Let's go. Woo! Happy Friday, everyone.
Happy Friday.
Right, so we are off. Let's get my screen up, charts up. I'm going to zoom in on the winners first. Take us through some of those names, Elliot.
Let's have a look here. What's interesting on that list?
A lot of consumer names, right? Look,
A lot of consumer names. Yes, definitely.
Again, buy now, pay later. Carvana is up there, 2.5%. We got C3, Snap as well, up 2/3%. Any of those pop out to you?
Nothing overly exciting.
It's looking quite risk on there. Even Peloton is up 0.5% there.
Yeah, but nothing crazy.
Let's have a look at the losers list. Lululemon, and those of you with Team and up almost 8% now.
I'm a fan of Lulu.
Oh,
there you go.
I am too. Isan and I have a bet that in 12 months, he says Nike shares will perform better. I'm on the Lululemon side.
I'd probably be on the Nike side.
So far he's winning because Nike's been beaten down, right?
Yep.
But he was saying that, and my bet with you is going the wrong way because he's been buying Lululemon stuff.
Okay.
So, as a consumer.
Expensive taste.
Expensive taste.
Right.
Blockchain down 2.8% there. MicroStrategy also down about 3%. See, this is the interesting thing too, Elliot. We saw that, the meme stock come on, then it came off.
Yep.
And then we saw, obviously, Bitcoin, Ethereum charge upwards, roofing, and then now they've come off.
Bitcoin today's been absolutely smashed.
Yeah.
We obviously do a daily option on that, and this is probably the highest our vol's been for a couple of weeks now. So, yep.
Just taking a look at some, the names related to that. Mara, Coinbase are down there. SoundHound AI also coming off a bit now, not by much though, it has to be said. You're a fan of SoundHound? They create all the very clever voice recognition.
Can't say I've ever used that. I'm slightly out of that generation.
Ever been into I think it's the German cars that it has that voice activation, where you say, hey, find me the closest Sainsbury's, or find me the closest.
I've got a German car, but I've never used it.
I had a German car, Volkswagen, very good. Right, Procter & Gamble also down there. So some of the consumer names also down on the losers list. So quite a mixed session there. Let's just have a quick look across the indices. And we have, the Germany 40 down almost 8% there. Let's have a look. Wall Street pretty much, the Dow pretty much flat there, and FTSE down 0.33%. Right, so let's get to your first chart.
Yeah, I'll just touch on that. Very weak open today on Europe. Obviously, we had the story that broke on Wednesday, hopeful of a trade deal. That's kind of, any enthusiasm on that front's kind of eased away over the last 24 hours. Mainly because, diving into detail slightly, the EU probably want a slightly better deal than what Japan have been granted, which obviously won't wash too well in the States. So I think we're going to go back to the drawing board. I expect negative headlines before we see any progress. Obviously, we've got this August the 1st deadline looming.
I think it's going to be another disappointment. I mean, it's not going to be as big as everyone expects. And
July 9th passed without a whimper, didn't it? But that touches on to another chart. I don't know if you can get that up. Just about the kink in the vol curve. It's been the first time we've actually seen
let me try and get that up.
any risk premium actually added into the S&P options. So S&P options on exchange, you can trade every day going out to about 6 weeks. Those options for August the 1st, there's a kink in the curve here. So again, this I've got from the CBOE. Now, is this because of the August the 1st deadline, or is it due to NFP? To be honest, it's probably a mix of both. What we have seen over the last 3 to 6 months is option traders have actually stuck a little bit of a premium on NFP, and maybe underpriced the tariff days. If you go back to April the 2nd, S&P options didn't actually price in any extra vol for that particular day, which in hindsight was quite a miss.
The interesting thing too is that what do you think will happen if we get a worse than expected outcome on the 1st of August? I'm only asking that because I'm strategically not going to be here. Strategically not going to be here.
I don't expect any fireworks.
Neither do I, but I'm just thinking, what if there are fireworks, right?
Then I can see where Rich is coming from. Absolutely. And again, I don't know if you can get the chart up, previous one, Exhibit 2, about the skew.
Right, we're going to bring Exhibit 2.
At the vol of out of the money options, if you like. So just having a look at the vol of out of the money calls versus out of the money puts. Week on week, and charts coming any second. Week on week, you can see that so you've got your put vols on the left hand side, your call vols on the right hand side. Your call vols have gone down, and your put vols have just been marked up ever so slightly. So it's maybe between 0.5% and 1%, pretty much across most of the vol surface on the downside. So there isn't anything out there that is overly cheap. So I was on last Friday. Rich is desperate for me to find him a cheap trade that gives him a lovely payoff. You're really struggling to find it. So he's not the only one who's got this idea out there.
Yeah. And, the thing is, we had Issa on as well, and we were talking about, the landscape at the moment. Not just vol is relatively low, but nothing looks really undervalued if you're looking around. Everything looks quite expensive, right?
It does. So you would expect Vol to be cheaper than we currently are.
We have questions for you, Marcus.
Far away.
We've got Marcus Kane asking, do you mean volume or volatility?
Generally in the options world, you will say vol to mean volatility.
So volatility. And Marcus Kane saying, can you discuss kurtosis?
Not on this forum that quickly.
if you'd like to talk about this or listen to this, Marcus Kane, send me an email and ask@ig.com. We covered kurtosis on the second ever Trade Live with IG with myself and Frank Caberna.
Okay.
Yeah, and he and Tom work from home. They were here and they talked about kurtosis, so I can send that to you. Yes, Marcus Kane, thank you very much for saying clear now. It is volatility. Right, we have one more. I love it. You should be a private investigator because Exhibit 4, we have one last one.
Okay.
Here we are, because as we talked about this recently, Bitcoin's been crushed. And let's have a look at this chart because you have taken a look at crypto's performance. See, there you go.
Yeah, so this is rebased against the dollar over the last 2.5 years. Gold, which is more of a traditional asset class. You're going a long way back.
You said to go back to that and to zoom in on it. I would have had to click on this chart, but it doesn't like it because I've got other. Yes, I can. I have to go back to my desktop.
Okay.
Here we are. It is producer Phil's fault for asking me to zoom extra. Here we are.
Yeah, so this is the chart from that FT article, which again I highly recommend you all have a read today. Just highlighting exactly how far crypto has come. So gold is pretty much close to its lifetime highs still, and it's absolutely powered into significance into the crypto boom. So this really does go into the crypto space has seen a huge amount of FOMO over the last 12 to 18 months. Eventually, it's a bubble that is going to burst. Obviously, we don't know when, but
we don't know when.
Bit of a hit today.
We don't know how. But just bear in mind, trader friends, this is not advice or, this is not a recommendation, but this is a very interesting chart, which actually, interestingly enough, does underline why there's this saying, right? A lot of people who are under the age of, 35, tend to get into investing and trading via crypto.
Often,
and those that are over around the age of 35 tend to get in via gold. And so, that is the rule of thumb here. But looking at this chart, it's not hard to see why, right? Because if you're looking at your returns and you happen to have, for example, Bitcoin or Ethereum, and then you suddenly see this huge jump, overnight. I know a friend who put in 50 quid in Bitcoin a long way back, and it's now 1,080 pounds. He was like, why don't I put in more?
Wow, yeah.
Right?
20x on a return is just unheard of. So.
Yeah, it is unheard of.
Fantastic.
Right, so on that note, we've got Bill Blaine next, and we are very privileged to have you here. It's not often that we can wrench Elliot away from his desk. He's a very hardworking man.
I had coverage today, which is a rarity, so...
Thank you very much, and
always a pleasure
sharing your chance with us. Have a great weekend.
Where are you off to?
I am. Well, today initially I am off to see one of Luke's clients, and she is extremely successful, and she's I think opening her 7th restaurant, if not 8.
Fantastic.
And so I'm going to visit that restaurant and visit her, obviously, as well. And she wants to grill me on Nvidia.
Okay.
So that's the start. This weekend, we are possibly going to try and test drive another car.
Very nice.
Yeah.
Okay. So. Talking of cars, you may have seen I did daily Tesla options, a world first, back into last week. They've been very popular.
Right. This is a 0 DTE?
Absolutely. Yep. The only one brave enough on the planet to do so. We are going to add the rest of the Mag 7 imminently as well. So watch this space.
Thank you very much, and have a great weekend. And are you playing any sport?
No, this weekend.
No tennis?
No tennis.
Golf?
No.
Barbados?
Barbados on Monday for 3 weeks. So
wow!
I'll be back all tanned from the end of August. So
nice. All tan. He's already tan. Right, stay right there. We'll get you another tan man, Bill Blaine.
Okay, guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat, come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest. And it's days like this, we get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Bill Blaine in the house. Good morning to you. How is it going over there with you in Hamble?
Good morning. I'm not entirely sure. I've been at my desk since the sun came up. I have looked out. It's definitely a world out there, but it's been a busy morning already.
It has been a busy morning and a busy overnight as well with, Intel, crypto, all sorts of things. I mean, it's just not been a dull moment so far in 2025.
Oh, I'm absolutely loving it. I mean, it's fantastic. I mean, Donald Trump is the gift that just keeps on giving. So much going on in the markets, and a lot of it driven by what he's done. But we're also in a period of enormous change as well. We've got changing geopolitics, we've got changing markets, and it's making it really, really interesting. We also have on the back of that a couple of really spectacular bubbles that threaten to unfold, and they're likely to shift the way that we invest. So yeah, fantastic. If you're part of the market commentariat, as I am every morning when I'm writing my morning porridge, it's fantastic. When I then do my day job, which is in alternative assets, the private capital markets, suddenly it gets very, very difficult because the big investors are very concerned about what comes next and very concerned about liquidity risks and what are the real threats of the global economy and how might they impact the way that markets are trading.
The question, Blaney, everyone is asking is the comedy or the drama in the White House a problem for the markets? Is it? I mean, we've seen this happen time and time again.
Yeah, I don't, you know what? What's going on in Washington this week is just, it's interesting. It's potentially dangerous because Trump is clearly riled by the Epstein thing. It's causing him to make all kinds of distractive accusations. I mean, this thing about Barack Obama trying to mount a coup, or Jerome Powell wanting to build himself a marble palace.
Which he's not going to be in for long, even if he was built.
It's crazy. This is all distractive noise, but it's clear that Trump is really riled by the whole Epstein thing, and perhaps he has good reason to be riled. You know, the rumors are that he's been told his name features prominently, but come on, that's what we expected. We knew that. The problem is, though, that a riled and volatile Donald Trump could tip things messy very, very quickly. Now, I think the markets always expected this, so it's not the end of the world. You mustn't panic about it. But markets are sitting down and they're trying to figure out, what does it mean in terms of the US stock market, which we all know is priced for above perfection. What does it mean for the US debt markets, especially if we see the Republicans split down MAGA and Republican things, and they're unable to agree on budgets and debt reconciliation and such? And what does it really mean for the US economy? So far, let's give Trump the benefit of the doubt. The US economy has actually done much better and has been far less impacted than everyone thought it would be from the tariffs. We haven't seen the galloping inflation that we all assumed was going to happen. You know, in many ways, it's actually worked. Now, that may just be because these things are delayed. But there is a real growing risk in the US economy, which is not related so much just to the tariff actions. It's where the US consumer is. And let's be brutal about it. The US consumer is tapped out. And for the economy to continue to grow and justify where we are in the markets, you can't have consumers who are being hit with rising consumer delinquencies on credit cards and auto loans. In fact, auto loan delinquencies, I think, are at the highest rates since the global financial crisis, the immediate aftermath of that. We've got student loans are now being collected against. That's money straight out of everyone's pockets. And we've just had this earnings season, which was fairly robust. And I couldn't believe the number of reports that were saying the same word. And that report was resilient. I mean, they were all saying, oh, the market is more resilient than we thought. Well, yeah, I think there's a consumer shock coming. Now then, go one step along from that and ask yourself, what is it that's really been driving the markets the last couple of weeks particularly? And it was, Elliot just said it earlier. He said, it's FOMO. Fear of missing out. All the institutional money has been trying to short the markets, thinking, this has gone too high, we are overpriced. But it's been kept up by retail money coming in on the basis of FOMO. And it's that kind of speculative trade that is making US markets look so overpriced at the moment.
Elliot also said it was an FOL. Yeah, the fear of loss. Elliot also said, you know, other than FOMO, it's also fear of loss, right? So
yeah,
all
but
those
I think FOMO
fund
is
managers.
the most important, strongest force in financial gravity.
Pelican chiming in. Good morning to you, Mo. Asking you if you would use gearing for your fund if markets go south.
Would I use gearing? Well, actually, what am I am not going to give trade advice, and I shouldn't really talk about trades that I have on, but my favorite trade at the moment is my levered short on Tesla. Now, Angeline, you've known me for years and years, and I think as long as you've known me, I have been short Tesla. And you know what? It's never worked. I always got wiped out in the end, because I know, because I'm a very highly intelligent market analyst, that Tesla is unsustainable. But the market doesn't know that, and so Tesla has bounced higher and higher for years. I think it's all finally coming to roost now. The numbers that we saw this week from Tesla confirmed, in my view, it's now nothing but a meme stock. That's all Tesla is. Now, that has massive implications for the rest of the so-called Magnificent Seven, M7 as I call them. But I think Tesla, you know, that's my levered trade at the moment, is a big short on Tesla.
even if you've been calling this for as long as I've known you, since we were 4?
I'm not sure automobiles were actually invented when I was 4.
I'm trying to imply that we're very young here. Also, the other thing, Bill, is that, you know, Tesla, despite everything, it does have, of course, this big cult following, right? Let's not forget that. This big cult retail following that
that's
keeps...
the definition of a meme stock.
Yeah, keeps supporting it. And as long as that remains in play, you know, this is going to be one that is supported. We see, you know, buyers coming in at around 288. We see buyers, you know, still every time it kind of dips to that level, we see it come up again. And to be honest, those numbers recently were terrible, right? Outlook was terrible. And yet I wouldn't be too surprised if we see a bounce up again later on today.
And seriously, what is it going to bounce up? I mean, let's just think about what Musk said 2 evenings ago at the Q2 earnings. He said, I mean, I couldn't believe he giggled as he described a 12% decline in sales. I think the 7th successive quarterly decline in sales in California, the key market in the US for Tesla. He then talked about how he would roll out Tesla auto taxis in half of America by the end of the year. Hang on, that's entirely dependent on regulatory approval. And guess who hates Musk the most?
Right
and has
now.
his fingers on the regulatory pulse.
Yeah.
That ain't going to happen.
Yeah.
I think he mentioned something about 100,000 Optimus robots a month by the end of the decade. That ain't going to happen.
No, because I think the gamble was to get the revenues from the so-called robo-taxi to then drive that into the development of Optimus.
Now, there is a rumor, I'm not sure it's true or not, that there are only 10 auto taxis in Austin, and they're on a very small circuit, you know, where they're deemed safe to drive. And I am told that one of these robo-taxis has already been vandalized and is off the road. I won't tell you how it was vandalized, but apparently it's quite rude.
Boston Frank saying nothing is overpriced or underpriced. Prices are where they are through the interaction of buyers and sellers. Boston Frank, you sound like a technician yourself, because that is what technicians say, that it should all be reflected in the price. But my humble opinion is it should also move hand in hand, in tandem with fundamentals. And right now, the fundamentals, short term anyway, for Tesla, not looking great. Of course, Tesla's all about the longer term as well. Let's not forget that. Those that follow this stock closely know that it's all about, you know, the outlook, space, logistics, and you know, the rest. But back to trading, you know, what's happening in the US right now. Yes, we're seeing the credit side of things not looking great, but Bill, don't you find that we've been in this place before? The US consumer seems to be ever resilient, right?
This is the word that I question, Angeline. You know, the resilient, I think, is the wrong way to describe them. Look,
each time we think they're going to crack, they haven't cracked. We've been here before.
And they never will crack and completely collapse. But there is a deep significance to the way that the retail consumer consumes. And we're going to see that illustrated quite soon. Last year, in the election, Trump had his 25% of MAGA core who absolutely, you know, they were going to vote for him no matter what. No matter what happens with the Epstein rumors, they will still vote for him in 18 months at the midterms. The difference is going to come from US consumers who switched to voting for Trump because they thought, oh, the Democrats were just so bad. They bought the PR and they switched to buying Trump's. Now, they are not seeing their position materially improve. They have seen inflation is not lower. Interest rates remain high and are likely to remain so. They have seen their wages flatline. Nothing is getting better. These are the people who are going to look at the economy and say, yeah, Trump has done some things good. Yeah, he's delivered on some of his promises. But my personal situation is not any better. And that's when, in the midterms, in 18 months, you see the real significance of this decline in consumer confidence, that they will switch away from the vote that they lent Trump. And that brings the end of this era closer.
I disagree. I think Trump is, yes, I do, with everything that we've seen of Trump. He is the only person with enough firepower to even if he fails to bring through this growth, he has enough firepower to start a war. He has the ability to stimulate growth elsewhere and to create some other diversion. And the other key thing as well, Bill, is, when BBC just did a panorama and they went to all the Trump strongholds, and I think it was filmed in the last 8 weeks. Have a look, and you can find it on the system. They asked all these people whether they would still vote, given what they know now. Some of them very eloquent, by the way. They did a big sort of cross breadth of, people that voted for him, and they said yes, even after what they know so far, they will still vote for him. And I think the key to this, and I've spoken to many Americans, including those that I have a vast network over there because I used to work there. The key to this is also FOMO. What they're seeing on their mobile phones, what they're seeing on Snapchat, Instagram, TikTok, whatever. Everything is alluding to, Trump is right, good times. No surprise that he has his own broadcasting system, right? We all know that. And the other thing too is that if you look at any metric, never mind the debt situation or whatever, Americans have had it good compared to 3-4 generations ago. I mean, even on a health basis, yes, they have an obesity problem, but on average, most Americans are living longer. The thing here I want to underline is that he has the firepower to change the narrative. And therefore, I think the midterms might be a surprise. You might find that there's even more supporters.
I think we're going to have to watch and see what happens here. Because this...
You sound like producer Phil.
I think this likely failure of Trumponomics and Maganomics, whatever you want to call it, to deliver on the kind of promises that Donald Trump made to the electorate, and especially to the swing voters and to his MAGA constituents. If that is not delivered over the next 18 months and they don't start to feel more prosperity and they continue to feel tapped out, which is the way they feel today, that's going to be the critical influence on the coming elections. So you and I will start putting money on this over the next 18 months. I am going to say that they're going to struggle. Now, the thing that may save Donald Trump perversely is the Democrats. Now, there's a great saying, I think it's been ascribed to, the ancient Chinese philosopher Sun Tzu, never interrupt your enemy when they're making a mistake. And there's a lot of people thought that's what the Democrats were doing, but it's not, is it? Because Trump is scoring successes, as you say, and he does control the narrative to a certain extent. I think the problem with the Democrats are they simply have not got used to the fact of being spanked at the election last year. Now, I think one of the great failings in the UK, and one of the reasons that the UK is in such an absolute mess today, is the fault of the Labour Party over the last 15 years, when they failed to provide an effective opposition to an absolutely terrible series of Conservative governments. Now, I fear that's what may happen in the US as well, that the Democrats are failing to provide the kind of pushback that keeps Americans aware of what it is they have in terms of a strong, free, democratic economy. And if they don't act soon, then, they will gift Donald Trump the power to maintain that narrative that you're talking about. So, as always, these things do come down to what the market believes, which is about the aspects of where numbers and results and earnings, but it also comes down to how consumers feel. And if they're not spending, that will have an impact on earnings, and they will be disappointed and will change their voting narrative again. So this is something we need to watch very carefully, I feel.
So I get asked very often, how do we trade this, Ange? How we invest in this environment? So the first thing is to shrink your position sizes, little and often, as they say. Also diversify your holdings. We talk a lot about that on the show, Rich and I. Make sure that you don't have all your eggs in one basket. I'm certainly using my stocks and shares ISA to diversify my pensions holding. Set stop loss orders religiously. I'm a stop loss girl here. Make sure that you have guaranteed stops on dates and times like August 1st, for example, or in the precursor to the days before August 1st. Sometimes it's the weekend before August 1st when you start getting those tweets. Keep your cash on the side. Keep your cash ready to be deployed. That's what I'm doing ahead of August 1st. I've got some of my cash positions deployed in building a position in some select gold miners, but the rest of it, I'm waiting to see what happens in the coming weeks. And stay adaptable and unemotional. We talked about a lot of biases here. We've got SR talking about trading psychologies, and also we had Scotty Byrne here with us yesterday. He changed his candles, which I really liked. Bill, have you done this before? He changed his candles to yellow and blue because it's less emotive. I quite like that.
Yeah, I've never tried that.
I'm going to try that this weekend. The red and greens don't work so well for my astigmatism.
I tend to be less. I'm not a chartist, and I've always been somewhat dismissive of charts. Although when I started in the markets, the very first market I really got involved in using charts in was actually the Japanese stock market in the late 1980s, when we were going through this fantastic boom in Japanese equity warrants. And at that point, I was taught by a chap exactly how to use it. I was referred to things like Elliott theory, Elliott wave theory, and things like that. And so you pick in all the elements of that. But I've got to say, I've never actually thought about. I tend to be driven less by charts, but more in what I read in terms of what I think the sentiment of the market is. I mean, because the sentiment of the market is what you trade in. You invest based more on common sense. But certainly trading is much more a sentiment-driven thing, because that's how the market is going to vote. Because remember, that's all the market is, a massive voting machine. So you watch the sentiment. Now, you can get a good idea, especially when you've got big ups and downs on your candle charts. But I think it's a much better idea to listen. And what I see at the moment in the States is a market that is very much driven by retail FOMO sentiment. And when that switches into, this might go wrong, it's already going to be too late for the people who are piling into the market now. Now, does that mean we have a massive crash in prospect? No, it means we've probably got something like a correction. But as soon as somebody like me says, don't worry, there's a correction coming up, not a crash, that probably raises the probability of a crash.
Marcus Kane chiming in again, saying, Bill, where do you actually see the fund flows?
The fund flows, the thing that's driving the US market just now is partly the institutions covering shorts, but mainly it's the retail flows that's keeping everything so high.
Also, Pelican chiming in saying, and save enough chip for the dip. Avocado. October choppy, then Christmas rally. Is that your kind of outlook, Bill? Do you think we're going to get choppy October and then a Christmas rally? The funny thing is, Christmas rallies recently have been kind of getting earlier. Have you noticed that, Bill? It's been like last year, off the top of my head, I think it started in November.
Yeah, October is always the unkindest month for markets. And I think by October, we're going to really see the effects on global trade of tariffs starting to kick in. Now, I don't think they're going to be as devastatingly inflation driving as was originally feared, but they're going to be significant, and they're likely to stop the Fed easing. And that means going to be even more pressure. I wrote about 2 weeks ago that I reckoned Jay Powell was toast, that he may even choose to go so as not to damage the credibility of the Fed any further by keeping this constant debate about independence versus non-independence going. So I think we may be seeing certainly a less rosy economic picture. We're also going to be seeing these consumer effects that I was talking about earlier. So come October, I think you're going to have a slightly depressed market. But who knows? Maybe by then there will be real trade resolution happening, and we'll see things starting to bounce higher on a more settled global trade world. So yeah, that might be quite a nice scenario. At the moment, my outlook is for, how would you put this? Enhanced economic concern through the next 3 months.
Here we are, there we have it. You heard it here first from Bill Blaine. Enhanced economic uncertainty or concern. Right, Bill, always a pleasure speaking to you. We have to wrap up and we're going to do the week ahead after this, so stay with us. But Bill, have a great time. It looks sunny, good for sailing this weekend.
It is indeed. It's the start of the famous Fast Night race on Saturday, and I've actually got my Fast Night t-shirt on from a couple of years ago. We'll see what happens.
I've got my Musto jacket on. Speak soon. Hey, welcome to Decoding Crypto with me and Ryan Grace, head of Tasty Crypto, all the way from Chicago. Hey, Ryan, how's it going?
Hey, Angeline, I'm doing well. How are you doing?
Yeah, good. You're looking dapper in that jacket there.
Oh, thank you. I've spruced it up for episode 2 here.
Nice. Episode 2, and we talked about what is crypto, helping our trader friends understand the basics. Now we delve a bit deeper into that V word, volatility. Just take us through how volatile crypto is compared to, for example, stocks and shares. That's considered, having a wide range of volatility. Of course, bonds, by contrast, considered, to be lower volatility. How does crypto sit in all that?
Yeah, absolutely. So when you think about the risk spectrum and you think about volatility from that perspective, I would put crypto, or let's say Bitcoin, for example, in the same bucket as a lot of high beta tech stocks. Now, if you look at the life cycle of Bitcoin, of the crypto industry, you've had a lot of volatility at certain points in time, no different than bouts of volatility that you see in traditional markets. But over time, crypto has become less volatile. That's a function of more liquidity, more participation, more awareness, and more risk management in the space versus where we were, let's say, 10 years ago. So you've seen the volatility come down over time in terms of the peak in vol on a yearly basis. At one point, we were used to Bitcoin volatility well above 100% annualized. Today, on my screens, I have an implied volatility of Bitcoin of right around 40% on a 30-day basis, and the realized or actual volatility for Bitcoin on a 1-month period is right around 30%. Now, these are some of the lowest levels we've seen this year. But for context, you can compare that to the implied volatility currently of Tesla. That's about 70%. So when you look at this versus a lot of the popular tech names, the Mag 7, it's at times as volatile, if not a little bit more, but often many times it's less volatile. So I want to dispel the myth that this is an extremely volatile asset. It can have bouts of volatility like anything else, but generally speaking, its volatility has come down quite a bit over time.
And let's talk about risk reward too, because, we have many people asking about, is there a formula? And Ryan, some people asking whether or not there is a straightforward calculation, or is this really down to each person's risk appetite?
I think it's really down to your risk appetite, but what's unique about this asset is its asymmetry at this stage of its life cycle. At some point, that market becomes saturated with participants. But it's still relatively early stage, and we've talked about it being relatively early stage for adoption. As a result, you have some asymmetry that's embedded in this asset class. And what I mean by that is that the reward quite often is a multiple of the risk. We know what the risk is. It can go to zero. We've seen significant drawdowns over the course of history. So in 2014, about 60% drawdown. 2018, we had the ICO bubble and then the subsequent crash, about a 70% drawdown. 2022, we had the FTX exchange debacle. We had the subsequent collapse in the industry, and we saw about a 60% drawdown. So the drawdowns, while significant, have become smaller in size, but you still have points in time where the upside is, again, 2-3x what those drawdowns have been. So for context, you look at the average annual return of Bitcoin over the last decade, it's 84%. If you look at 2024, what did it do just in total? Last year went up 120%. Currently, on a one-year basis, if you look back on a rolling one-year period, we're up about 56%. So you have, in many cases, a lot more upside with Bitcoin. Bitcoin's a bit more mature. If you go further out on that risk spectrum, you look at things like Ethereum, Solana. Arguably, there, at least historically, has been more upside and actually more volatility. We talk about the risk. You look at these assets, you say, okay, they're very volatile. Well, that's on the upside. They can only go to zero. The volatility actually is positively correlated with the price, which is quite often the opposite of what we see in traditional assets, where volatility spikes. It's quite often that the price of the asset is going down. Not so much the case here with cryptocurrencies, with Bitcoin. Right. And so when you think about how you trade that and risk management, sure, you can have some formula and you can come in here and you can say, I'm going to put this trade on and I want a 10% gain and I'm going to cut my losses at a 5% loss. Maybe. I personally, in my opinion, think that you want to try to take advantage of that asymmetric upside. That's the reason you might want a small allocation to this asset. So within your portfolio, because of that upside volatility, a little bit goes a long way. So you don't have to have a huge position to benefit from some of that asymmetry and that convexity that exists in Bitcoin.
So some, on that note, are asking whether or not it should be a, drip feed strategy, put a little bit in at a time rather than a big chunk in.
Yeah, I think that's definitely one way to approach it. You can dollar cost average in, or in this case, pound cost average in. I'm here in the US, so dollar centric. But given nobody knows what's going to happen in the future, right? And at times it has been very volatile. That's one way to approach it. We were at $75,000 per Bitcoin at the beginning of April. We're here near or at an all-time high at the time of recording of about $110,000 in Bitcoin. And so because you have no idea what it's going to do and it can move very, very quickly, if you're looking to invest in this over time, you have a multi-year time horizon, then maybe a dollar cost averaging or a drip kind of approach to the market makes sense.
Right. I know your time is short. You're a very busy man. Just wanting to cover some of the market risks and the landscape out there, especially regulation as well. Of course, we had, some big name scandals recently. You already mentioned FTX, but there was also Bybit and, of course, OneCoin as well. What are the risks going forward? Not just tech, but also human.
Yeah, I think when you look back throughout history, I mean, there have been a lot of exchanges that have been hacked. Arguably, as those things occur, that makes the system more durable. You learn from that. There's kind of this degree of anti-fragility in some ways. You see that in the traditional financial system as well, right? We've gone through periods where bad things have happened, and then as a result of that, we see regulations that are formed, and we fix those problems we learn from those mistakes. I think you're seeing the same thing here in the crypto industry. So regulation is coming. Unfortunately for crypto, what happened in the United States post FTX was really the weaponization of government agencies against the industry in response to what happened with FTX. What happened with FTX was, let's be frank, the people running that exchange were committing fraud. They were misusing customer funds in ways that there are protections that exist to protect consumers against that in the traditional system that aren't necessarily in place in all jurisdictions here in the crypto industry. But that's changing. So there's always going to be some risk associated with that, but I think that we're going to get farther away from it. And what you're really going to have to more so worry about are the same risks that exist when you invest in any other asset class. And those are specific to the underlying position that you hold, the leverage that's embedded in it, and then what drives that market on the margin. We can speak to that in a second. But on the regulatory front, I think that's actually one of the most bullish developments, because this has been an environment where a lot of institutional participants have been sidelined, and that capital that we're looking to really come in and in some ways influence price action here hasn't participated in the market. So what's happening in the US, at least, is a stablecoin bill that's making its way through Congress. And then following that, assuming that we see that pass, we should have a crypto market structure bill here, which then gives everyone that is waiting for a regulatory framework a set of rules they can adhere to so that they can then participate. And I would imagine that you then see big banks, larger financial services companies that have yet to really be in this space, they start to participate. And I think that improves liquidity and maybe mitigates risks for everybody over time, right? I mean,
it's
here
super
today,
exciting. We're kind of looking across the pond, you know, waiting for a date for when that is all going to happen. Is there a clear date yet?
The best sense that we have from talking to certain people in the industry and actually, you know, hearing from people in Congress themselves is that they're very hopeful we get something done by the end of the summer. So let's say by the end of August. Whether that's the full spectrum of stablecoin legislation and crypto market regulation, we'll see. But I think that you'll get something, which is encouraging.
Right. Thanks very much. We're going to leave it there. Ryan Grace from Tasty Crypto from Chicago. Looking forward to having you on the third in the series, where we delve more into regulation and how that's transforming the industry.
Thanks for having me.
We're back. This is Overtime. I'm your host, Chris Vecchio, here in New York. Dylan Radigan in Milan. Mike Butler in Chicago to round out this trading week. Mike, thanks for joining us. Ilya should be back next week, assuming New York lets him go. We're here for the rest of this hour. Markets close at 5 Eastern, 4 Central. If you are watching us on the platform, Tasty Trade, on the website, tastylive.com, thanks for joining us. Come over to YouTube. Tell us what you're trading. Mike, I think you're on the chat today, so say hello to Mike Butler here during the show. It's a record high.
Hello, Mike
the
Butler.
Hello, Dylan. How are you?
Hello, Mike Butler. Very well, very well. Nice to see you. Sorry, you were working there, Chris. I do apologize.
It's a record high close for the S&P 500, although not without a late day sell-off that kind of takes some cream off the top. The NASDAQ likewise closes higher, although not near where it was after the Google earnings yesterday. Tesla struggles on the backside of comments made by Musk during the earnings report. Bonds are able to recover after slightly dipping lower. Metals slightly weaker. We go to the dollar, which is firmer. ECB did not cut rates today, and they said they're on a meeting-to-meeting basis moving forward. So their cutting cycle appears to be finished. Outside of that, Intel earnings are now out here after hours, and they are as mixed can be. They beat technically on the revenue guidance. However, the earnings per share is negative, and we see the share prices are trading slightly higher here right now as we turn to the charts. Mike, I'm assuming you're the earnings play guy here. Great timing for that to go off. You're the earnings play guy here for Intel, I assume, because I'm not trading it. I don't think Dylan is either. You have any view on Intel as we make our way into the show?
I did not place a trade there. I placed a trade in Tesla, just an iron condor there. That's a scratch. Yesterday I did IBM to the downside, and then Google to the upside. I sold it on the open before it sold off. So I literally did the best I could in those three situations. Tesla I still have on, but Intel, I didn't place any trades there. I think Nick sold a put, so if it stays right here, it'll be just fine. But these $20 stocks, they're low priced and there's not much to sell there in terms of premium. So I just stayed away from this one. But yeah, interesting to see it up on the mixed news. I would have assumed it might come down a bit if news wasn't great.
It's not the numbers that drove Tesla lower yesterday, guys. It was Musk commentary. Tesla stock was fine before the earnings call. It seems that Musk is warning, if you take him at his word, that he's warning that the next few quarters could be bad. Period of transition. Ultimately, maybe some of these tax credits going away could hurt the underlying business. Dylan, you, me, Westwater, Ilya, we've all been people who have said fade the noise in Tesla. But this feels like perhaps a different kind of noise now. Elon Musk not being as braggadocious as he usually is. Should we be buying the dip here in Tesla as folks like Dan Ives are saying we should?
100% yes. 100% yes. I mean, I don't know anybody who's ever gone wrong buying the Tesla dip. The obvious caution to my sort of brazen, confidence is that it obviously can go lower. So, whether you buy this dip or whether you wait to see if there's more of a dip in the offing. I mean, the question is, what's a dip, I guess. But in this particular instance, I think that Tesla is always a buy the dip name. And to your point, the dip was not a function of the numbers. It was a function of the guidance, effectively. I mean, listen, from a trading perspective, do you buy the dip? I have no idea. From an investment perspective, is it good to own Tesla? No question, yes. And so I think reflexively, anytime you get a Tesla sell-off, you want to be certainly taking a look. I mean, again, sell some put spreads with some room for error. You don't have to be right on the number there. You can give yourself at least one standard deviation to the downside, and get yourself some duration to sort of let this thing play out.
Mike, I think that's an excellent point. Dylan says go out to the one standard deviation move. The 57 days might be a little bit too rich, but going to 43, that puts you closer to the 26, 260, 270 short put spread if you want to go out to the one standard. Getting closer to under 70% profit, giving this some room to run. Mr. Radigan, our low of 273.21 on June 5th. That Thursday, that's when Elon Musk is accusing Trump of a whole variety of things on Twitter or X. That seems to be a low that you could work around and place a trade around. You can get a pretty decent risk reward just under risking 2 to make 1 if you want to sell a put spread right now in Tesla. Yeah. Is that something you'd be interested in, Mr. Butler?
Yeah, I think it's totally in play, especially into a big move like this. But I totally agree with Dylan. I think you have to categorize some of these stocks. And Tesla is a Mag 7 stock with a lot of public interest, and a lot of people want it to go higher. So if you think about that for all these other stocks, like Apple's another one I was just talking to Nick about. Like Apple, I will 100% be buying into for earnings and beyond, just because it's like, okay, you have this massive company has not participated in the rally. Would you be surprised to see a rotation out of maybe a Microsoft or Nvidia into something like Apple? Absolutely not. I think it's totally in the cards. And to Dylan's point, like if you're investing, buying a couple shares here and there, I think it's a higher probability than 50%, in my opinion. But if you're trading it, you just got to be careful, keep your risk small. In Tesla, if you're going with a put spread instead of a short put, for example, if you are just protecting yourself from a continuation of this move. But yeah, I think it's when you're approaching a near low for the year, like we haven't gone really below 270-ish, like you said, for many months. If you can get down there, if you place your strike there now, you have yourself kind of a psychological floor there at the very least.
You know, one of the items that I saw that came out about Tesla, which is really interesting too, they got rid of 75% of their Bitcoin holdings in mid-2022. So even though Tesla's crypto holdings on their balance sheet grew from 722 million to 1.24 billion a year ago, that's not because they were holding on the entire time. They actually jettisoned Bitcoin near the lows. So that's not, maybe that's something as well. Either way, though, the Tesla put spread looks interesting at 43 days. We can get this queued up for tomorrow morning. I think it's worth, well, we're not going to accept, it's after, okay. So we'll have to wait for tomorrow. Either way, though, doesn't really matter to me. Tesla, the robo-taxis, we can listen to the story Musk is spinning us. Where's FSD? Still not here. But at 305, given where we've seen lows carved out, I mean, I think 270 is a bit of a floor. 270 is the floor post-earnings last time. It's the June 5th swing low. It's something to work with. Let's go to the index level, though, here, Mike, because NASDAQ didn't have the kind of day that the S&P 500 did yesterday. Today, it feels like it was a little bit more catch-up after Google. We're just hovering below all-time highs. Our friend Dylan Radigan here has been egging me on to get back long the market, which after a brief 2-day reprieve as sitting on the sidelines in the NASDAQ, I did jump in yesterday afternoon. Am I right to be looking long here, or am I crazy with the NASDAQ at 6.4 negative IVR to try to chase this up for the final few seconds?
You know, it looks scary to get long here, but all you have to do is drag that, click and drag the right axis, bring it down. There you go. Now you got plenty more room to run.
Oh, this market's been flat for a few weeks.
Oh, we need Mike Butler.
I think of that myself.
No problem. Thanks, Mike. There you go.
But no, to answer your question, I think it's hard to believe that the market will continue higher. I mean, but at the same time, if you look at the VIX, we're in the 15s again, and we've done plenty of research on this showing that when we get to these mid to low teens in the VIX, it tends to stay that way for quite some time. And if it's staying here in the 13, 14, 15 range in the VIX, I have to assume that the market, while it can still have choppy days and sell-off days, the general consensus in a low VIX market is up and to the right. So I think, again, you keep your risk small, you pick your spots. If you're trading options, if you're looking to get into shares, like maybe you're trying to buy Tesla, like today's obviously an 8% sell-off in Tesla. So I think you keep the risk small still, but yeah, I'm playing for up and to the right until something happens. But this is also a point in time where my options positions are very small, and I have a lot of cash on the side waiting for something to happen. So
what are you waiting for, Mike?
I don't know. I'm still playing it to the upside in a lot of these stocks, but I just layered on a downside diagonal in SPY, but that's defined risk. And I have a lot of other bullish positions that would offset that. But maybe it's next week's earnings. We have a ton of earnings in a lot of these big name stocks. Maybe one or two of them just completely fall out of bed and sell off aggressively, but we'll see.
Mike, this was the research that you were mentioning. I haven't actually updated this on my end, so technically this is through July 30th of last year. But you talk about like what's the optimal strategy in these markets. When the VIX is between 10 and 15, being long stocks produces a lower volatility of daily returns and a higher average daily return than being short a strangle. Like we talk about a market where volatility is low, volume's low, right? You kind of just set a trade on at the money calls, a little bit out of the money. You're long the futures. You're just long the index, right? And then you go fishing. It is that playbook. The only thing that really bothers me about that all happening is, and I do need to go to Twitter here, I can't help but feel like there are some signs of excess in this market today. Guys, an Ethereum rock sold for $300,000 today, 82.4 Ethereum. Now, yeah, that's probably money laundering or a wash trade or something. Okay, but we also have CTA positioning for U.S. equities in the 90th percentile right now. And if volatility follows its typical seasonal path, this is a 20-year average of the VIX, this is about the time of the year where volatility starts to trend up again for the next 3 months. So, Mike, when I say I feel like I'm chasing this thing higher, Icarus flying into the sun, Ethereum rocks for 300K, 90th percentile positioning, and VIX seasonality around the corner. It does make me nervous. It makes me nervous being long in this market.
That's fair. Totally fair.
Dylan, why should I ignore all those stats for nerds?
You should ignore those stats for nerds because there's just as many stats for nerds that underlying secular super macro trend, which is a new piece of legislation that massively enriches the wealthiest people in America to dump billions and trillions of dollars into assets and drive them higher at the same time as inflation rises, which only supports equity prices and the collapse of the U.S. dollar. I think that the primary risk of the Trump administration resides in the currency, and I believe that the primary benefit of the Trump administration resides in the stock market.
Well, S&P does continue a little bit higher here today. It's only by 0.11%. The Nasdaq's up by 0.34%. Mike, the Russell was really weak today after it looked like it was about to break out yesterday. Do you have any good rational rhyme or reason why the Russell here is there a way to cover the divergence, right? Should Russell outperform the Nasdaq moving forward? Is that the trade or is that dead?
I'm not sure it's alive. I mean, if you look at the watch list, the Russell 1000 or just any of the Russells, you can look at the microcap, the mid cap, but you can see the net change on a handful of products are over 10% to the downside today. So it's being dragged down for sure. Likely Chipotle plays a role there. They had earnings and they're down 13%. But yeah, I mean, when you look at the NASDAQ, the shiny thing that everybody wants, the AI stocks, the traditional tech stocks, I mean, it's hard to, and I think that even creates even more pressure to the downside in something like the Russell, because it's like, well, why would I want to be in these other stocks when I can be in Nvidia, Google, Microsoft, Apple? I think it's a harder sell to be in those products when you have this new revolution in AI kind of pulling the NASDAQ higher, pushing the NASDAQ higher.
Something to keep an eye on here. Donald Trump has arrived at the Federal Reserve to take a tour of the Marina Eccles building's renovations with Fed Chair Powell. And apparently they are bickering in front of the press right now. So one thing to keep in mind about these comments that are coming out here, the Federal Reserve is in a communications blackout window right now. Policy officials are not allowed to comment on monetary policy. So if Trump gets up there and starts saying that Powell needs to lower rates, Powell needs to cut rates, he's too late, Powell's probably just going to sit there and take it. You can't really argue about the state of the economy at this juncture. But it's an important visit, Dylan, because it's only the fourth time in history that a Fed chair has visited the Federal Reserve itself. FDR, Gerald Ford, George H.W. Bush, and now Donald Trump. Is this a unique event because it's the fourth time? Is this the paradigm shifting? Are we in a new world order now? Or should we ignore this?
New world order as it relates to what?
Federal Reserve independence is dying.
I mean, not yet, but I think that the agenda of the executive office is to take over the central bank, to take over the media. I like the idea of just letting Trump take over everything. Just let him use weaponized security to kill whoever he wants. Let him control the central bank, and let him control the media and just see where it goes. Like, why bother resisting at this point? I think it might resolve itself more quickly if we just let him control everything.
Are you sure you didn't watch that episode of South Park last night?
No.
Are you sure?
But I just say you just let him rip.
Mike, my low stakes conspiracy is that Trump's going to see last night's South Park episode and he is going to bring about all sorts of AI regulation to the space.
I mean,
that could kill the NASDAQ rally.
What was the poly market on whether he would mention it or not? What did it end up at? Strong number?
Does the chat know what we're referencing right now?
Maybe not. Maybe not.
There's a 0.0% chance that I'm ever going to watch the South Park episode. So if you just want to paraphrase it for our mutual benefit, I'm happy to sort of.
I like my job here, Dylan. I like my job here, Dylan Radigan.
Okay.
Let's just say it wasn't positive. It wasn't positive.
It wasn't positive as it relates to what?
As it relates to Trump. But
Thomas Westwater was asking me, he's like, "Oh yeah, I can't wait to watch this. I'm going to watch it on the train ride home." And I said, "Thomas, you should not watch this episode on the train ride home. You might get people might start asking questions on the train ride home.
They might send the armed security to run the interrogation on you.
He might not be allowed back on the train for a little while if he watches content like that." All right, so we have a chart here in notes and bonds where there's a little bit of recovery at the long end of the curve today. It's interesting action where instead of short end rates sticking or falling and long end rates going up, that's kind of the opposite of what occurs. Mike, I don't think that we are conceptualizing any chance of the Fed cutting next week. Do you have any strong feelings on the Federal Reserve meeting on Wednesday, July 30th?
I agree with you. I think there's a 0% chance that they cut rates. I've been saying, like, prove me wrong. Like, show me a cut. I don't think we're getting a cut this year. We're projected to get 50 basis points. There's a 42% chance that we get 50 basis points by December. But the probability of doing nothing has been just increasing every single time I look at this thing. Like, even in September, we were at a much higher probability to get a 25 basis point cut, and now we're at a 40% chance that we do nothing again. So I don't know. Show me a cut if we're going to get it, but I feel like they just continue to kick the cut down the road.
Is that a problem for stocks, Dylan, if the Fed doesn't give us a cut in July or September?
Yeah, I think it is. I mean, I think that the market is hoping, expecting, I think it's pricing and anticipating rate cuts in the fall. I think that the confidence of that expectation was meaningfully diminished by the June inflation numbers. The CPI and PPI were horrendous. And so I don't think they're as expected as they were before the PPI and the CPI came out. But I do believe that there are strong expectations for rate cuts in the fall. But I think more than that, I think there's expectations that whatever happens with tariffs will be relatively moderate. So, I mean, I think the biggest question right now, and I think that the stock market is still expressing extraordinary confidence. I mean, you saw the sort of extortion racket that Trump announced today, where he said no European luxury cars will come to America unless the American drug companies reduce their prices. Some sort of convoluted effort to pressure, I guess, European drug makers to raise their prices, I think was the solution there.
I think that's the solution. Yeah.
It's like either fuck the Europeans or cut American prices, excuse my language, but it's some sort of mafia logic where it's like, at least we can destroy Europe even if we can't save ourselves. But I guess my point is that whatever comes out of the negotiating table in Washington, I'm always impressed by the stock market's relative confidence to hold its value, and basically the stock market's relative indifference to whatever Trump says. But I do think that underneath all of that is some expectation for a rate cut at some point in the near future.
I'm seeing a tweet here that Trump punched Powell, but that can't be true.
Not everything on the internet is true. A lot of it is, but not
is anything on the internet true, Mike Butler?
I think there's a handful of stuff that's true, but Twitter,
like a broken clock that's right twice, kind of thing.
Yeah. Oh man!
There. They look good in their hard. They look really good in their hard hats. Touring the building.
I can only imagine the tension between the two there. But yeah, I don't know. I feel like give us a rate cut if we're going to get one.
Sorry,
how can I give you a rate cut when they've got tariff-driven inflation?
I don't think they can. I don't think they will. I think they'll just keep pushing it.
You don't think it'll happen this year at all? Do you think that that's a reason to sort of be less optimistic for stock price? In other words, if you really think there's no rate cuts in 2025, don't you think that means that both the bond and the stock market are incorrectly priced at this particular juncture?
I think it could be a reason for the market to come down a little bit. Yeah.
So,
man, it's tough to be Chris Vecchio, I tell you. The poor guy. He just wants to get short on his birthday, go to the beach. He's got babies. He's got a nice bakery in town. He just wants to have a cinnamon bun. And he's stuck in this conflict because he's got me just tweaking him. I'm like, come on, Vecchio, we can do it. But I mean, all we got going for us, brother, is the Trump legislation, which is not nothing. But if Mike Butler's saying the rate cuts aren't going to happen, and now the tech earnings are behind us, and even the Musk guidance is lousy, I mean, maybe we're on the wrong side of history here, sir.
Being long, we're on the wrong side of history?
Yeah, for the summer. If we're not going to get rate cuts, if there's going to be tariffs, tech earnings are behind us, inflation is back, and all we got going for us is the biggest tax giveaway to the rich in the history of the world. I guess my concern is if Mike Butler's right and we're not getting rate cuts in the fall, I think that's a problem between you and me and everybody else watching this podcast.
In 2024, we enter the year with expectations for the Fed to start cutting in March, right?
Yeah,
sure.
We didn't cut in March.
No, we didn't.
That got pushed to June. We didn't cut in June.
That was a problem.
And in August for like 5 days.
Mm-hmm.
Right, and then we rip off that August bottom, and then the Fed gives us 2 cuts in September. But there wasn't a problem for the market, and the market at the end of June was closing on the highs after 2 big meetings, the quarterly meetings in which they produced the summary of economic projections, didn't give us a rate cut, even though we were expecting one several months out. I think the context matters, right? If the Fed comes out and says, listen, inflation's still sticky, the unemployment rate is 4.1%, and the economy is still growing north of 2%, this isn't an economy that we need a cut into. I don't think the stock market's going to look around and go, well, corporate earnings are holding up better than anticipated. Consumers are still consuming. I don't think that we care about the cuts, honestly. I don't know, personally, have you guys been investing in the stock market or trading long stocks on the basis that the Fed's cutting rates soon?
No, but I look at the rate cuts as an indication of the underlying macro expectations for the cost of capital in a way that is supportive. Does that make any sense?
Sure.
That there's a tailwind baked into the whole situation of rate cuts this fall.
Okay. So then is the risk over the summer? If we know that the Fed's not going to cut in July, Mike, and we know that there's not a Fed meeting in August, then doesn't that make the risk not just for seasonality and the VIX to go bump because it's now the 8th month of the year, but because we have a trigger. We've been waiting for these cuts. We have 125 basis points priced into the end of next year to be cut, and we have to come to the realization that money's going to be more expensive, and than Ilya and people like him will be okay.
He's foaming at the mouth, I'm sure, if he's listening. Maybe he is, maybe he isn't. But yeah, I mean,
I hope he is.
If you look at some of so we had a couple of earnings come out. So Texas Instruments, random name, but they dropped dramatically on weak earnings outlook. Chipotle, same thing, weak future forecasts. And then IBM, same thing. So we're kind of seeing some of these companies either make revenue and have a weak forecast, or miss revenue, have a weak forecast. We're seeing weaker forecasts down the road. Do you think this is kind of pricing in everything we're talking about? And maybe all it takes is a couple of big name Mag 7 stocks to really have a bad earnings report next week, and that kind of starts the tumble.
Right. Well, the real issue is the guidance, right? I mean, to your point, that was the exact point you were just making, which is if everybody's going to guide lower consistently and meaningfully, and you're not going to have rate cuts, now all you've got is a tax giveaway.
And all you got is the tax giveaway. The bottom 80% don't see the significant amount of tax hike, if you will, from loss of services and the change in rates that go across the board. That's not going to really bite until the end of next year. So, in fact, if you think about the politics of it, really probably good timing for the midterms for Republicans, all things considered. The bite doesn't happen until 2027, at which point the midterms are over. So for a lot of folks who are going to say, oh, yeah, all these cuts are coming, your cost of living is going to go up because you're losing Medicare, Social Security, it's not going to be wound down as quickly as some may be suggesting it will. Is there a Jack Welch angle to all these companies, though, Dylan? This is your stock prices.
There's always a Jack Welch angle, which is guide lower and beat, guide lower and beat, guide lower and beat.
But why not just throw the bathwater out right now? Like, just get all the bad news, guide lower now before the tariffs come. It's a freebie, right?
Look at that IBM chart.
Well, IBM had a run. Yeah, it was up from 213 to 295 in the span of 3 months. I mean, if I'm an executive, what juice do I get from guiding higher right now? Like, I have to be really confident in this environment to say I'm going to guide higher. And if I have any uncertainty, I can let my share prices take a haircut for a little bit. I mean, Texas Instruments is down 13%. That's not nothing. IBM's off. Texas Instruments was off 13% yesterday, so that's not nothing. But it's back to where it was trading, 6 weeks ago at the beginning of June. That's not exactly world-ending for the company. And if they now ride out this third quarter and the tariff costs aren't materialized, they're not going to beat on everything. They've just lowered the bar for themselves. And it feels like there's, as we've been discussing here on the show, there's 3 stages for how companies are going to handle the tariffs. First, they're going to kill all they're going to try to supply chain manage. I absorb some of the costs, you absorb some of the costs. Second stage is where they kill promotions, sales, price matching. Target did that this week with Walmart and Amazon. Third stage is the revenue management, right? So now you've lowered the expectations for everyone. You remove the deals, right? The market's not overcooked on your outlook. Now you start to raise prices. Hopefully volume doesn't fall off too much. And now you've kind of like insulated yourself from the tariffs to a certain degree. Expectations management's part of that. So I don't know. I look at a Texas Instruments. The 4.9 IVR doesn't make it any sort of appealing to me. But the fact that we're sub 200 again, approaching 175, there's a little bit of a gap here in the low 170s. This is an interesting opportunity for a company that's been very, very strong. Share prices, up 30-something% from the low. That's not for no reason. I think there's a game of chess being played is what I'm saying right now. Because there's no incentive to say that you're going to have a great quarter with the tariffs coming. It's one way to lose your job.
And I kind of like. I mean, I'm not silent for no. I'm reflecting on your logic, which is Because basically what you're saying is this is just more reason to be bullish. Because not only do you have the super tax break, but you have an incentive for the top 100 CEOs to be as negative as possible coming out of the June quarter because of the tariffs, to try to reset their equity price to perform well in the second half.
Yes.
Mike Butler, what say you? Seems pretty logical from where I'm sitting.
If you parlay that with the Santa Claus rally, now we're talking.
Yeah.
Because at the end of the year is always, you always hear those sleigh bells.
That's Trump's thing, right? Didn't we all say, oh yeah, now that the market's back up, Trump's going to feel like he can play fast and loose with tariffs a bit more? He wasn't feeling that way in early April after they went into effect. The bond market's getting yippy. Now the stock's at all-time highs. Like, okay, he's playing with some house money right now. If the stock market goes down 5 or 10% from here, in his point of view, like, okay, so we're still higher than we were when I was elected. He can still spin that. Why wouldn't CEOs have the same approach? This is free money. You just got to push to all-time highs. Get the bad news out of the way now. Lower expectations. And everything that comes after here is gravy. So maybe the call is Texas Instruments to close the year. Maybe that's the play right now. We go out to the end of the year. 148 days. Now let's go beyond there. Let's go to 176. A return to... I mean, look, we can take a move back to where we were last week. 176 days out, risking 1 to make 4. That's really cheap, Michael.
It's not expensive.
You're going full Michael, huh?
Yes, Dylan Furr. That's what I do when I'm serious around here. I give full names, no nicknames.
Yeah, you're going full Mike. You're like, I really like this trading position, Michael.
I mean, it's the same thing with BT. Well, the same thing with the BTU position. When volatility was on the floor, looking for an out-of-the-money play to go back to basically where we were around Election Day, 176 days out a few weeks ago, it kind of felt like a little bit of a layup. And that's working well right now. It's still a 9 to 1 risk to reward, Dylan. But when we have these volatility contractions and some of the big names have come back in, if we're in the process of reducing our capital exposure into the market, as Mike and quite frankly, as I've taken into my own trading style, having listened and learned from some of these other more options-oriented folk around here over the past few years. But when it's really sunny like this, it doesn't mean go lay out in the sun. It means it's time to go inside and get hydrated. You take some trades off the table. You start getting your capital dry so that when the volatility storm eventually comes in, you're prepared. And if in the process of reducing equity exposure, it's like, let me punch a few lotto tickets around here just to have in my back pocket some longer term ideas. I don't think that's a bad way, a bad approach, especially if you're going to step away for a few weeks, by the way, which is we're in that window now. I could tell you here, we have this thing in town where basically the first 2 weeks of August, no one plans any community events because just no one's around. It's not even worth it.
Where are they going?
Just traveling, right? It's kindergarten orientation is like the 3rd week of August. So families like to do their travel before then, apparently around here. And just thinking about that, schools are starting soon, right? Most schools go back into session mid-August, early September. This is a period of time where people may want to take capital off the table. And if you want to take capital off the table because you're traveling, you're going to be on vacation, you're just taking time off for work, and you don't want to worry about the market, longer dated exposure if you still want to have skin in the game. Don't set yourself, right? Dylan, Mike, I don't know if you guys do this. I sometimes go on vacation, but I have a trade on, and then I spend my entire vacation day looking at the market.
Misery.
And that's the sickness.
Pure misery.
Yeah, you and Nick are the same. Nick's like, I can't disconnect, and I'm like, I don't even know where the market is right now because I'm fully disconnected, enjoying this beer in Scotland. We went to Scotland last year, but
nice.
Yeah,
and apparently you had beer.
We did many tenants. Strong beer out there.
Sure, it's a fine beer. It's a fine nation or region. How do you feel about Scottish independence? You have an opinion there?
I don't. I'm not informed enough. What's going on
But
there?
you're good with the beer.
I am.
Dylan, you don't think that I have an opinion about former Scottish Prime Minister Nicola Sturgeon on the...
I mean, do you have an opinion on Scottish independence, Mr. Vecchio? Sir?
I'm absolutely all for Scottish independence.
And Catalan independence?
I don't care as much about that because we weren't a vestigial state of Spain, but we were a vestige of England. I think that's as far as I want to go, given who our parent company is.
But once you spring Scotland, you got to spring Catalonia.
Yeah, why not?
And once you spring Catalonia, you got to spring Bavaria.
Bavaria's got to go.
Which would be southern Germany among friends.
Rejoins Austria. Got the Austria-Hungary region going.
City-states.
Oh, bring back city-states. Okay.
Munich will run the operation in Bavaria. Barcelona will run Catalonia. Edinburgh will run your Scottish Empire. And once you free Scotland, the Catalans and the Bavarians, you only have one choice, which is to free the Lombards, because they're bankrolling the whole lazy state of Italy. So then Milan's going to have to spring loose. And then you'll just have a few small, extremely wealthy nations, and everybody else can eat dirt.
Am I rooting for Scottish independence? No, I got mugged in Scotland once, so I have mixed feelings towards the country. It's interesting.
You know, Scotland is oil rich.
Is it? North Sea, of course.
Quite so. Anyway, back to our regularly scheduled programming before I totally disassemble the European continent.
That's fine.
Forgive me.
I get a lot of emails for my commentary about European ice and air conditioning on the show, although I would remind everyone having AC and ice does make us better. So you can still wear that hat. Dylan, I don't know how you guys do it over there in the summer without AC and air conditioning and ice in your drinks.
For the one thing, we actually have ice and air conditioning in every apartment, in every room in the house, temperature controlled and glorious. And so the primary way that we do it is we just actually live in reality as opposed to some sort of delusional fantasy of idiotic Americans who don't actually think that we have air conditioning, with all due respect. And so by virtue of having the air conditioning and the ice, we don't suffer any of the issues that you might suggest.
Would you like a chance?
Did I just insult Americans? I didn't mean to do that, by the way.
Would you like a chance to just fact check your stats on how many homes in Europe have air conditioners before I...
You know what, I would. It's funny you should ask. I got my phone right here. Okay. And I got my Chat GPT is one of my I got 4 things but if you look at my phone, at the bottom of my phone, I got a language app. I got to learn Italian. It's a pain in my ass. I got a travel app, Kayak, because I fly all over the place all the time. I got a hotel app, Hotel Planner, because I'm always staying in hotels. And then I got 4 apps. Chat GPT. Let us find out what should the question be, Vecchio? What should I first should I condition it?
What percent of homes
you are an expert
in HVAC.
In HVAC in Europe. I love ChatGPT. I love it. Best $20 I spend every month. Okay, so I got myself an HVAC expert in Europe. And what's the question, Vecchio?
What percent of European homes have air conditioning?
Of European homes. Butler doesn't get to hang out with fun people like us all the time in public. Hang on. What percent of European homes, this is so much better than Google, by the way, have AC? Is that the correct? Do you approve of the question, sir? What percent of European homes have AC? Stand by. Sure. Calculating, searching the web, analyzing.
This is important stuff.
Not great. Not great. The numbers are not very good, sir. I'm looking at a 7% number in my home nation state of Italy. Don't like it. Spain, they're talking 41%. I like that. UK, 3%. Shame on them.
Those are low numbers.
Man, those are terrible numbers, Mike Butler. I shouldn't open my big mouth. What percent of apartments in central Milan
Okay,
AC.
Look at this in Europe.
Europe, I stand corrected.
Look at excess heat death in Europe compared to North America, Latin America, or even Africa. Right? Europe is nowhere close to as big in terms of population as Asia, and yet it nearly has the same number of people who die from heat death every single year.
I stand corrected.
This is not because I'm anti-European. I want our European brethren to enjoy modern civilization and not die from heat during the summer because it's too hot outside. Install AC. And you know what? I'm glad this is becoming a really good topic. This was published 2 days ago. The new hot topic in European politics is air conditioning. We're making progress here in overtime, Dylan Radigan. The jihad continues.
You know that air conditioning is a number one issue with global warming because the electricity, the amount of carbon emitted to produce the cooler air is actually creating the thermal insulation that is thus causing a warmer environment. So there's a negative feedback loop between the rising temperatures and the carbon load that is being produced to do all your fancy air conditioning because you're some big rich fancy American with your big bakery and your summer vacations.
Well, I would quote Singapore's founding father, Lee Kuan Yew, who considered air conditioning one of the most important inventions for all of civilization, saying, quote, "It changed the nature of civilization by making development possible in the tropics. Without air conditioning, you can work only in the cool early morning hours or at dusk." And obviously, the first thing he did when he took over Singapore was he installed air conditioning in all government buildings. And Singapore is what it is today for decisions like that visionary had. So bring AC to Europe, Dylan.
And the Earth, by the way, is at a carbon load and an average global temperature that is the highest it has ever been, as a result of all your fancy air conditioning just jacking the atmosphere full of carbon. So thanks for nothing, pal. Why don't you get a fan? Why don't you take a walk? Why don't you wake up a little early in the morning and have a cup of ice water?
Dylan, I did wake up. I woke up at 4:15 this morning and couldn't go back to bed, and so I watched the new episode of South Park. And then at 5 o'clock, I tried to go back to sleep, and I had these AI images of Trump wandering through the desert seared in my brain, so I couldn't go back to sleep.
Okay, so why don't you tell me about that South Park episode? Because right now I'm in a beautiful room full of air conditioning, so I'm very open-minded and ready to hear any new information that might help enlighten me and give me a better life.
Guys, I think that we just made Dylan. I think we just made your shoe company all of its money. All of your shoe stores have air conditioning and serve ice water with like those little cucumbers in them.
Are you coming to Fashion Week in Paris? We're going to run just pure air conditioning and ice water and really expensive sneakers. Plus, you got to buy a plane ticket to Paris. So it's not a great deal, but you get a fine shoe.
Oh, well, I'll look into it. I'm sure my 30-week pregnant wife would appreciate if I just abscond to Paris for a few days.
She'd bring her. One lady doesn't like a weekend in Paris. Show me a woman who's not happy to have her.
She's in grad school right now.
And charming husband, such as yourself, to take her to Paris for the weekend to buy some fancy Italian shoes. Come on.
Dylan, if life were so easy, I'd be there right with you.
I mean, once you make all that money on your Tesla long position, and I don't think it'll be an issue.
Yeah, I'm a corner Tesla. True. Mike, what's your view on the metals up here? Dylan and I have been chewing on this for a few days. We haven't heard your thoughts recently. Gold, silver, copper, go to the miners. You can go to the equities like FCX, dealer's choice.
Yeah, I've been trading the gold butterflies consistently, and we're about to have one roll off. I had a put butterfly on the downside that I sold for $250. That should expire worthless. And then I have a gold and the V contract, a iron condor there that's up a little bit, but just kind of playing for more chop here in this range. It hasn't left this 200-point range in many months, so I'm just playing for more of the same.
Come on, Mike Butler. I mean, how often do you even join us? I need a definitive point of view on gold and silver. My boy Vecchio has jacked me into the silver position time and time again.
Well, silver,
usually to my benefit.
Yeah,
usually to my benefit. Usually to my benefit. I have to be honest. For the first time in my life, I want to buy gold. But if Mike Butler doesn't like it, or should I say Michael Butler doesn't like it, I'm not sure I can go forward.
No, I like long precious metal. I like long gold, long silver. I think if the story is, and if you believe that the dollar will continue to be devalued, then you want to have these assets, even if they're at highs. So I've just been playing
Let's take it another step further, Mike Butler. Do you believe the U.S. dollar is fucked?
Eventually, it will be. Yeah. When you leave
as a PG-13 program, we can say that once on air.
Okay, I'm sorry. But I mean, that is a correct opportunity to use the phrase, sir.
But yeah, I mean, when you think of how inflation is not going anywhere, and if you leave the value of a currency in the hands of human beings, it's going to get devalued over time. So yeah, if you're looking for something...
Over time, we're down 20% in 6 months, brother.
I know.
I mean, this is not over time, nothing.
Yeah.
It's a disaster.
It's not good. It's not great. But yeah, I think Bitcoin, gold, silver, those are nice assets to have in an environment like this.
How about a little dollar bounce, a little something for a friend? Maybe somebody earns dollars and lives in Europe. Do you care about him?
I do. But yeah, it's been tough. I've been trying to buy
that much, apparently.
I've been trying to buy the dip here in the dollar too. I'm trading the tastyfx currency pairs. I'm short the Aussie dollar. I'm long the dollar franc. I'm long the dollar shekel. I'm short the euro dollar. So I'm right there with you.
Okay, so at least you feel it's. I mean, my man Trump has really got the dollar by the neck. You know what I'm saying?
It's not great.
But it's so good.
The dollar today, it tries to break back into its downtrend from the February and June swing highs. It doesn't quite get there, though. I mean, if we were back under 97 during the show, we would say that the bounce is dead. There's no more hope. All hope is lost. We're going back down to the yearly lows. Hide your kids, hide your wife, yada, yada, yada. Best laid plan. Yeah, exactly. Call your mom, tell you love her. But that's not this. Even the yen, which has been a thorn in my side this week, we go back to that daily chart, the past 3 days in a row, trying to push to the 1 month, and we're closing below it every time today. A nice little reversal candle there, so perhaps this is something to work with now moving forward. Volatility is really low. That's not the case, though, in the euro or the pound, where volatility is higher. So I suppose for typical tasty traders, Mike, if we're looking at the currency futures here, you have your euro, your pound, even your Canadian dollar with IVRs that are right near 50. That's more of the typical selling call spread, selling put spreads, short iron condor, short strangle viewpoint. I myself think that if we're going to be directional in the dollar, you want to do it in the low volatility products to buy something a little out of the money. So I'm still playing for 0068, 0067. I'm not enthused, but the dollar short is still among the most crowded trades. And so thinking about the second half of, not this week, we're already in the second half of this week, but the remainder of this month, long gold, long Mag 7, short dollar are still the three most prevalent crowded trades, according to Bank of America Fund Manager Survey. So at some point, something's got to give, at least for just a small bounce and rally.
Yeah.
Dylan, quickly here, is the dollar story, is this the main thing to watch as the barometer for Trump? Forget the bond market, forget stocks. It's currency.
The dollar is the referendum on America through the lens of the Trump presidency. It's not the stock market. It's not the bond market. It is the dollar. And the dollar is... not to use a previously used word because I've used that word. So the dollar is in decline, and it is in severe decline, and it is a notable issue that is a direct reflection of a collapsing confidence in the relevance of America. How about that?
That's fair enough. So we've covered gold, silver, dollar. We've talked stocks, a little bit of bonds. We've talked some earnings here as well. We do now have the video of President Trump giving our Fed chair a hearty slap on the back here as they wind their meeting down. I love him to lower interest rates and gives him a slap on the back. Markets don't care because Powell can't say anything. Maybe that's the good news for tomorrow, guys. Trump didn't go to the Federal Reserve building today and fire Powell. If he really wanted him gone, wouldn't he just do it there and then? Maybe he's not getting fired ever. I personally don't think so. This whole story is so ridiculous to me. The funding overrun for the building is a pretense to get rid of him. Come on. That's just, it's the worst. It's the lamest thing I've ever seen. Dylan, I want you to take us out here. Give us something to talk about for the last 5 minutes that's been on your mind that I haven't.
Like I haven't said anything already today. Listen, I mean, you're really putting the burden on me here, but I'll tell you what. America is a demographically and economically dominant nation. I do not believe the dollar will collapse. I do not believe the dollar will decline significantly from here. I do not believe Donald Trump represents a material risk to the future of the country or any president. And I do believe, I like the thing that I most enjoyed about today's program, which is a thought I hadn't had previously, was your comment that you believe that there is an active and dynamic indication of sentiment from the giant company CEOs to portray their expectations as cautiously as possible in order to endure whatever equity losses are available to be had now, such that whatever happens in the third and fourth quarter, that it is seen favorably. I think that that is actually a positive for the market overall. I think that the fact that there is an incentive coming out of the second quarter for the big bosses to come out and say, listen, it's a mess. I can't make any promises. You never know. My God, I don't even have air conditioning in Europe. whatever their comments are, is really just a pretext for a more optimistic environment. So I think that that's probably the most optimistic thing that I heard in the last hour of discussion. The most concerning thing was from my good friend and neighbor, Michael Butler, who can frequently be found drinking beers in Scotland. I don't know about frequently, occasionally be found drinking beers in Scotland. And he is rather ambivalent. No, he doesn't think, I would even say, does not think that we are necessarily going to have rate cuts this fall. And I think that rate cuts this fall are sort of taken for granted. And so the most optimistic thing that we're sort of dealing with right now is the possibility of lowered second quarter guidance setting up rallies in all of these stocks because of the little beak pounding that they're going to get coming out of these second quarter calls, with the most negative dynamic being the absence of rate cuts in the fall. And I would like to note that according to ChatGPT, 55% of the apartments in the city of Milan where I live do have air conditioning. And so I live in a small pocket of air-conditioned air in a continent that is absent this very thing. And so don't hold it against me that I'm sort of stuck with the cognitive bias of my own lived experience, and so I'm oblivious to the lack of air conditioning in the very nation state that I reside.
Mike, we have 2 minutes left. What's grinding your gears here?
Not much. I would like. I would like.
No problem. This guy's no problem. This guy.
Yeah. There's no problems.
Why do you feel so? How about that? Let me rephrase, Mr. Vecchi. Then why do you feel so good about the world, Michael Butler?
I'm just an optimist. I think I like to look at the good side of most things. But no, I think I actually do agree with everything we've said here in terms of maybe these companies accept a little punch from earnings just to set themselves up for outperforming later. But yeah, I don't think we're going to see rate cuts. I'm going to stand on that. I don't think we see a rate cut this fall. I think we
doesn't that mean dollar buy? Doesn't that mean you like the long dollar? If you're not going to have rate cuts, isn't that dollar positive on the margins?
I hope so, because I'm aggressively long the dollar in a myriad of different ways. So we'll see. So I guess that's my thorn in my side, the weakness of the U.S. dollar. That's what it is.
Weakness of the U.S. dollar. You know, we've lost a lot of celebrities this week. This is what's bothering me. The one today.
Hulk Hogan situation, that hurt me. The Ozzy Osbourne, and we got all kinds of problems.
Yeah, the Hulk Hogan one in particular, like as some may imagine, his and I, our politics don't line up, but I had the pleasure of meeting him once in person. My brother grew up a Raiders fan. I have no idea why a kid from New York grows up a Raiders fan, but he was
Al
begging
Davis, come on, Howie Long.
Yeah,
Those
my
guys
brother,
were awesome.
my brother
Marcus
born in
Allen.
1991 was thinking about Al Davis and Howie Long.
I don't know. Maybe like their uniforms, bro. Pirates, black. I don't know.
Well, the furthest east they were playing over the next 2 years was Indianapolis. So my dad flew my brother and I out there for like a dad-son trip to go see the Manning Colts take on the Raiders. And when we were standing in line at Indianapolis Airport, Hulk Hogan was in front of us. And he was massive. So he let me do some pull-ups off of his arm. He signed some autographs. He chit-chatted with my dad for 15 minutes. One of the nicest celebrities that I've ever met. I've met a few. Run into Amari Stoudemire at a club in New York City, bumped into him, spilled a drink on him. We had to buy him a bottle for his table. It was a whole thing. But Hulk Hogan was a nice guy. So rest in peace to the guy who brought
He was a good man. Hulk Hogan was one of the greats. Come on, rest in peace, Hulk Hogan. We love Hulk Hogan. Come on.
With that, overtime's out of time. We'll be back Monday, same time, same place, as always, right after last call, 4 p.m. Eastern, 3 Central. So for Dylan Radigan in Milan, Mike Butler in Chicago, I've been Chris Vecchio in New York. Good luck trading. See you soon. We're back. This is Overtime. I'm your host, Chris Vecchio, here in New York. Dylan Radigan in Milan. Mike Butler in Chicago to round out this trading week. Mike, thanks for joining us. Ilya should be back next week, assuming New York lets him go. We're here for the rest of this hour. Markets close at 5 Eastern, 4 Central. If you are watching us on the platform, Tasty Trade, on the website, tastylive.com, thanks for joining us. Come over to YouTube. Tell us what you're trading. Mike, I think you're on the chat today, so say hello to Mike Butler here during the show. It's a record high
Hello,
close
Mike
for the
Butler.
Hello, Dylan. How are you?
Hello, Mike Butler. Very well, very well. Nice to see you. Sorry, you were working there, Chris. I do apologize.
It's a record high close for the S&P 500, although not without a late day sell-off that kind of takes some cream off the top. The NASDAQ likewise closes higher, although not near where it was after the Google earnings yesterday. Tesla struggles on the backside of comments made by Musk during the earnings report. Bonds are able to recover after slightly dipping lower. Metals slightly weaker. We go to the dollar, which is firmer. ECB did not cut rates today, and they said they're on a meeting-to-meeting basis moving forward. So their cutting cycle appears to be finished. Outside of that, Intel earnings are now out here after hours, and they are as mixed can be. They beat technically on the revenue guidance. However, the earnings per share is negative. And we see the share prices are trading slightly higher here right now as we turn to the charts. Mike, I'm assuming you're the earnings play guy here. Great timing for that to go off. You're the earnings play guy here for Intel, I assume, because I'm not trading it. I don't think Dylan is either. You have any view on Intel as we make our way into the show?
I did not place a trade there. I placed a trade in Tesla, just an iron condor there. That's a scratch. Yesterday I did IBM to the downside. And then Google to the upside. I sold it on the open before it sold off. So I literally did the best I could in those three situations. Tesla I still have on, but Intel I didn't place any trades there. I think Nick sold a put, so if it stays right here, it'll be just fine. But these $20 stocks, they're low priced and there's not much to sell there in terms of premium. So I just stayed away from this one. But yeah, interesting to see it up on the mixed news. I would have assumed it might come down a bit if news wasn't great.
It's not the numbers that drove Tesla lower yesterday, guys. It was Musk commentary. Tesla stock was fine before the earnings call. It seems that Musk is warning, if you take him at his word, that he's warning that the next few quarters could be bad. Period of transition. Ultimately, maybe some of these tax credits going away could hurt the underlying business. Dylan, you, me, Westwater, Ilya, we've all been people who have said fade the noise in Tesla. But this feels like perhaps a different kind of noise now. Elon Musk not being as braggadocious as he usually is. Should we be buying the dip here in Tesla as folks like Dan Ives are saying we should?
100% yes. 100% yes. I mean, I don't know anybody who's ever gone wrong buying the Tesla dip. The obvious caution to my sort of brazen, confidence is that it obviously can go lower. So, whether you buy this dip or whether you wait to see if there's more of a dip in the offing. I mean, the question is, what's a dip, I guess. But in this particular instance, I think that Tesla is always a buy the dip name. And to your point, the dip was not a function of the numbers. It was a function of the guidance, effectively. I mean, listen, from a trading perspective, do you buy the dip? I have no idea. From an investment perspective, is it good to own Tesla? No question, yes. And so I think reflexively, anytime you get a Tesla sell-off, you want to be certainly taking a look. I mean, again, sell some put spreads with some room for error. You don't have to be right on the number there. You can give yourself at least one standard deviation to the downside, and get yourself some duration to sort of let this thing play out.
Mike, I think that's an excellent point. Dylan says go out to the one standard deviation move. The 57 days might be a little bit too rich, but going to 43, that puts you closer to the 26, 260, 270 short put spread if you want to go out to the one standard, getting closer to under 70% profit, giving this some room to run. Mr. Radigan, our low of 273.21 on June 5th. That Thursday, that's when Elon Musk is accusing Trump of a whole variety of things on Twitter or X. That seems to be a low that you could work around and place a trade around. You can get a pretty decent risk reward just under risking 2 to make 1 if you want to sell a put spread right now in Tesla.
Yeah.
Is that something you'd be interested in, Mr. Butler?
Yeah, I think it's totally in play, especially into a big move like this. But I totally agree with Dylan. I think you have to categorize some of these stocks. And Tesla is a Mag 7 stock with a lot of public interest, and a lot of people want it to go higher. So if you think about that for all these other stocks, like Apple's another one I was just talking to Nick about. Like Apple, I will 100% be buying into for earnings and beyond, just because it's like, okay, you have this massive company that has not participated in the rally. Would you be surprised to see a rotation out of maybe a Microsoft or Nvidia into something like Apple? Absolutely not. I think it's totally in the cards. And to Dylan's point, like if you're investing, buying a couple shares here and there, I think it's a higher probability than 50%, in my opinion. But if you're trading it, you just got to be careful, keep your risk small. In Tesla, if you're going with a put spread instead of a short put, for example, if you are just protecting yourself from a continuation of this move. But yeah, I think it's when you're approaching a near low for the year, like we haven't gone really below 270-ish, like you said, for many months. If you can get down there, if you place your strike there now, you have yourself kind of a psychological floor there at the very least.
One of the items that I saw that came out about Tesla, which is really interesting too, they got rid of 75% of their Bitcoin holdings in mid-2022. So even though Tesla's crypto holdings on their balance sheet grew from 722 million to 1.24 billion a year ago, that's not because they were holding on the entire time. They actually jettisoned Bitcoin near the lows. So that's not, maybe that's something as well. Either way, though, the Tesla put spread looks interesting at 43 days. We can get this queued up for tomorrow morning. I think it's worth, well, we're not going to accept, it's after, okay. So we'll have to wait for tomorrow. Either way, though, doesn't really matter to me. Tesla, the robo-taxis, we can listen to the story Musk is spinning us. Where's FSD? Still not here. But at 305, given where we've seen lows carved out, I mean, I think 270 is a bit of a floor. 270 is the floor post-earnings last time. It's the June 5th swing low. It's something to work with. Let's go to the index level, though, here, Mike, because NASDAQ didn't have the kind of day that the S&P 500 did yesterday. Today, it feels like it was a little bit more catch-up after Google. We're just hovering below all-time highs. Our friend Dylan Radigan here has been egging me on to get back long the market, which after a brief 2-day reprieve as sitting on the sidelines in the NASDAQ, I did jump in yesterday afternoon. Am I right to be looking long here, or am I crazy with the NASDAQ at 6.4 negative IVR
Well,
to try to choose?
You know, it looks scary to get long here, but all you have to do is drag that, click and drag the right axis, bring it down. Click and drag the right axis, bring it down. There you go. Now you got plenty more room to run.
Oh, this market's been flat for a few weeks.
Oh, we need Mike.
Why didn't I think of that myself?
No problem. Thanks, Mike. There you go.
But no, to answer your question, I think it's hard to believe that the market will continue higher. I mean, but at the same time, if you look at the VIX, we're in the 15s again. And we've done plenty of research on this showing that when we get to these mid to low teens in the VIX, it tends to stay that way for quite some time. And if it's staying here in the 13, 14, 15 range in the VIX, I have to assume that the market, while it can still have choppy days and sell-off days, the general consensus in a low VIX market is up and to the right. So I think, again, you keep your risk small, you pick your spots if you're trading options, if you're looking to get into shares, like maybe you're trying to buy Tesla, like today's obviously an 8% sell-off in Tesla. So I think you keep the risk small still, but yeah, I'm playing for up and to the right until something happens. But this is also a point in time where my options positions are very small, and I have a lot of cash on the side waiting for something to happen. So
what are you waiting for, Mike?
I don't know. I'm still playing it to the upside in a lot of these stocks, but I just layered on a downside diagonal and SPY, but that's defined risk. And I have a lot of other bullish positions that would offset that. But maybe it's next week's earnings. We have a ton of earnings in a lot of these big name stocks. Maybe one or two of them just completely fall out of bed and sell off aggressively, but we'll see.
Mike, this was the research that you were mentioning. I haven't actually updated this on my end, so technically this is through July 30th of last year. But you talk about like what's the optimal strategy in these markets. When the VIX is between 10 and 15, being long stocks produces a lower volatility of daily returns and a higher average daily return than being short a strangle. Like we talk about a market where volatility is low, volume's low, right? You kind of just set a trade on at the money, calls a little bit out of the money. You're long the futures, you're just long the index, right? And then you go fishing. It is that playbook. The only thing that really bothers me about that all happening is, and I do need to go to Twitter here. I can't help but feel like there are some signs of excess in this market today. Guys, an Ethereum rock sold for $300,000 today, 82.4 Ethereum. Now, yeah, that's probably money laundering or a wash trade or something. Okay, but we also have CTA positioning for U.S. equities in the 90th percentile right now. And if volatility follows its typical seasonal path, this is a 20-year average of the VIX, this is about the time of the year where volatility starts to trend up again for the next 3 months. So, Mike, when I say I feel like I'm chasing this thing higher, Icarus flying into the sun, Ethereum rocks for 300K, 90th percentile positioning, and VIX seasonality around the corner. It does make me nervous. It makes me nervous being long in this market.
That's fair. Totally fair.
Dylan, why should I ignore all those stats for nerds?
You should ignore those stats for nerds because there's just as many stats for nerds that underlying secular super macro trend, which is a new piece of legislation that massively enriches the wealthiest people in America to dump billions and trillions of dollars into assets and drive them higher at the same time as inflation rises, which only supports equity prices and the collapse of the U.S. dollar. I think that the primary risk of the Trump administration resides in the currency, and I believe that the primary benefit of the Trump administration resides in the stock market.
Well, S&P does continue a little bit higher here today. It's only by 0.11%. The Nasdaq's up by 0.34%. Mike, the Russell was really weak today after it looked like it was about to break out yesterday. Do you have any good rational rhyme or reason why the Russell here is there a way to cover the divergence, right? Should Russell outperform the NASDAQ moving forward? Is that the trade or is that dead?
I'm not sure it's alive. I mean, if you look at the watch list, the Russell 1000 or just any of the Russells, you can look at the microcap, the mid cap, but you can see the net change on a handful of products are over 10% to the downside today. So it's being dragged down for sure. Likely Chipotle plays a role there. They had earnings and they're down 13%. But yeah, I mean, when you look at the NASDAQ, the shiny thing that everybody wants, the AI stocks, the traditional tech stocks, I mean, it's hard to, and I think that even creates even more pressure to the downside in something like the Russell, because it's like, well, why would I want to be in these other stocks when I can be in Nvidia, Google, Microsoft, Apple? I think it's a harder sell to be in those products when you have this new revolution in AI kind of pulling the NASDAQ higher, pushing the NASDAQ higher.
Something to keep an eye on here. Donald Trump has arrived at the Federal Reserve to take a tour of the Marina Eccles building's renovations with Fed Chair Powell. And apparently they are bickering in front of the press right now. So one thing to keep in mind about these comments that are coming out here, the Federal Reserve is in a communications blackout window right now. Policy officials are not allowed to comment on monetary policy. So if Trump gets up there and starts saying that Powell needs to lower rates, Powell needs to cut rates, he's too late, Powell's probably just going to sit there and take it. You can't really argue about the state of the economy at this juncture. But it's an important visit, Dylan, because it's only the fourth time in history that a Fed chair has visited the Federal Reserve itself. FDR, Gerald Ford, George H.W. Bush, and now Donald Trump. Is this a unique event because it's the fourth time? Is this the paradigm shifting? Are we in a new world order now? Or should we ignore this?
New world order as it relates to what?
Federal Reserve independence is dying.
I mean, not yet, but I think that the agenda of the executive office is to take over the central bank, to take over the media. I like the idea of just letting Trump take over everything. Just let him use weaponized security to kill whoever he wants. Let him control the central bank, and let him control the media and just see where it goes. Like, why bother resisting at this point? I think it might resolve itself more quickly if we just let him control everything.
Are you sure you didn't watch that episode of South Park last night?
No.
Are you sure?
But I just say you just let him rip.
Mike, my low stakes conspiracy is that Trump's going to see last night's South Park episode and he is going to bring about all sorts of AI regulation to the space.
I mean,
that could kill the NASDAQ rally.
What was the poly market on whether he would mention it or not? What did it end up at? Strong number.
Does the chat know what we're referencing right now?
Maybe not. Maybe not.
There's a 0.0% chance that I'm ever going to watch the South Park episode. So if you just want to paraphrase it for our mutual benefit, I'm happy to. Sort of.
I like my job here, Dylan. I like my job here, Dylan Radigan.
Okay.
Let's just say it wasn't positive. It wasn't positive.
It wasn't positive as it relates to what?
As it relates to Trump.
But Thomas Westwater was asking me, he's like, "Oh yeah, I can't wait to watch this. I'm going to watch it on the train ride home." And I said, "Thomas, you should not watch this episode on the train ride home. You might get people might start asking questions on the train ride home."
They might send the armed security to run the interrogation on you.
He might not be allowed back on the trade for a little while if he watches content like that. All right, so we have a chart here in notes and bonds where there's a little bit of recovery at the long end of the curve today. It's interesting action where instead of short end rates sticking or falling and long end rates going up, that's kind of the opposite of what occurs. Mike, I don't think that we are conceptualizing any chance of the Fed cutting next week. Do you have any strong feelings on the Federal Reserve meeting on Wednesday, July 30th?
I agree with you. I think there's a 0% chance that they cut rates. I've been saying, like, prove me wrong. Like, show me a cut. I don't think we're getting a cut this year. We're projected to get 50 basis points. There's a 42% chance that we get 50 basis points by December. But the probability of doing nothing has been just increasing every single time I look at this thing. Like even in September, we were at a much higher probability to get a 25 basis point cut, and now we're at a 40% chance that we do nothing again. So I don't know. Show me a cut if we're going to get it, but I feel like they just continue to kick the cut down the road.
Is that a problem for stocks, Dylan, if the Fed doesn't give us a cut in July or September?
Yeah, I think it is. I mean, I think that the market is hoping, expecting, I think it's pricing and anticipating rate cuts in the fall. I think that the confidence of that expectation was meaningfully diminished by the June inflation numbers. The CPI and PPI were horrendous. And so I don't think they're as expected as they were before the PPI and the CPI came out. But I do believe that there are strong expectations for rate cuts in the fall. But I think more than that, I think there's expectations that whatever happens with tariffs will be relatively moderate. So, I mean, I think the biggest question right now, and I think that the stock market is still expressing extraordinary confidence. I mean, you saw the sort of extortion racket that Trump announced today, where he said no European luxury cars will come to America unless the American drug companies reduce their prices. Some sort of convoluted effort to pressure, I guess, European drug makers to raise their prices, I think was the solution there.
I think that's the solution. Yeah.
It's like either fuck the Europeans or cut American prices, excuse my language, or it's some sort of mafia logic where it's like, at least we can destroy Europe even if we can't save ourselves. But I guess my point is that whatever comes out of the negotiating table in Washington, I'm always impressed by the stock market's relative confidence to hold its value, and basically the stock market's relative indifference to whatever Trump says. But I do think that underneath all of that is some expectation for a rate cut at some point in the near future.
I'm seeing a tweet here that Trump punched Powell, but that can't be true.
Not everything on the internet is true. A lot of it is, but not everything.
Anything on the internet true, Mike Butler?
I think there's a handful of stuff that's true. But Twitter,
like a broken clock that's right twice, kind of thing.
Yeah. Oh man.
There. They look good in their hard. They look really good in their hard hats. Touring the building.
I can only imagine the tension between the two there. But yeah, I don't know. I feel like give us a rate cut if we're going to get one.
Sorry,
how can I give you a rate cut when they've got tariff-driven inflation?
I don't think they can. I don't think they will. I think they'll just keep pushing it.
You don't think it'll happen this year at all? Do you think that that's a reason to sort of be less optimistic for stock price? In other words, if you really think there's no rate cuts in 2025, don't you think that means that both the bond and the stock market are incorrectly priced at this particular juncture?
I think it could be a reason for the market to come down a little bit. Yeah.
So,
man, it's tough to be Chris Vecchio. I tell you, the poor guy. He just wants to get short on his birthday, go to the beach. He's got babies. He's got a nice bakery in town. He just wants to have a cinnamon bun. And he's stuck in this conflict because he's got me just tweaking him. I'm like, come on, Vecchio, we can do it. But I mean, all we got going for us, brother, is the Trump legislation, which is not nothing. But if Mike Butler's saying the rate cuts aren't going to happen, and now the tech earnings are behind us, and even the Musk guidance is lousy, I mean, maybe we're on the wrong side of history here, sir.
Being long, we're on the wrong side of history?
Yeah, for the summer. If we're not going to get rate cuts, if there's going to be tariffs,